Thank you, sir. Hello, everyone. Welcome back to live virtual classes from the Board of Studies, ICAI. In the last lecture, we were discussing transfer pricing. We started with the introduction and a few key concepts relating to transfer pricing. In this particular lecture, we will go on and resume with an important concept which is called international transactions, and then we will discuss deemed international transactions. After that, we will be discussing transfer pricing methods. And yes, we will be discussing all the methods relating to transfer pricing in India. And we will be discussing a few practical questions on all the methods, and then, a few questions that talk about all the methods in detail. So yes, that's really the plan for today. A quick recap from what we were discussing in the last lecture. This is what we started with, just a very, very quick recap. We started with, these particular case studies. We were talking about how, if this is an intra-group transaction, as in a transaction within a particular multinational group, there are situations wherein associated entities within that particular intra-group transactions, within that particular group or within that particular multinational company, how they manipulate the prices. And what is the effect of such manipulation? Well, the effect is that there is reduction in taxable profits. The kind of tax that they pay in that particular jurisdiction actually becomes less. Another problem that happens with these kind of transactions is that because there is price manipulation, there is shifting of profits from high tax jurisdiction to low tax jurisdiction. So each jurisdiction, they do not get their tax revenue properly, and this is the reason they've come up with something called as transfer pricing. So transfer pricing, as we were discussing in the last lecture as well, it's more like an anti-avoidance law. It's like a specific anti-avoidance law to make sure that whenever there are related parties, these kind of anti-avoidance strategies do not really happen. These anti-tax avoidance strategies, they do not happen. This is the reason they've put in something called as transfer pricing law. We were discussing this in the last lecture that, for transfer pricing law, obviously we will be relying upon the Indian transfer pricing law. Can anyone tell me the section? Can you quickly put it in the chat box? What is the section in India for transfer pricing law? What are the sections? Yes, absolutely. So for transfer pricing, we have section 92, and they go on till 92F for the purposes of transfer pricing in India. Apart from that, also, apart from the domestic law, there is also the OECD transfer pricing guidelines, and then there is the UN transfer pricing guidelines. I'll tell you whenever we rely on these particular guidelines, etc. I'll let you know. After that, we were talking about two transactions. There was something called as controlled transaction, and then there was something called as uncontrolled transaction. Controlled transaction basically means, a transaction between related parties. And uncontrolled transaction means a transaction between independent parties or unrelated parties. After that, we discussed that there's something called as arm's length price. And where is arm's length price coming in from? Well, they say that, whenever you find a situation, in that situation, you have a transaction, and that transaction is between related parties or it is between associated entities, and that particular transaction is an international transaction. If these two things are satisfied, then you will have to make sure that that particular transaction has happened at the arm's length price. So now the question is, what is arm's length price? Okay, who's unmuting to tell me what is the arm's length price? Okay, if you can put it in the chat box very quickly. In 3-4 words, how would you say what is the arm's length price? Okay, fair price. Anything else? Anything more specific? Price in terms of ordinary prudence. Okay. Uh, if you look at the arm's length price, it basically means, the price at which independent parties in comparable situations are transacting. So what is very important here to say is that what is the price at which independent parties in uncontrolled conditions would transact at, and that will become the arm's length price. So you have to basically, what you have to do in transfer pricing is to look at an independent party. Is this a comparable situation with independent party? If yes, look at the price. What is the price at which they are transacting? That will become the arm's length price. Where is the arm's length price coming in from? Well, it's coming from something called as the arm's length principle. Where is arm's length principle coming in from? Can you tell me the article we studied where they talk about the arm's length principle? It was there in the OECD Model Taxation Convention. Can you tell me the article number in the OECD Model Taxation Convention, which talks about the arm's length principle? Okay. Okay, just to give you a hint, it was an article on associated entities. What is the article on associated entities in the OECD Model Taxation Convention? Okay. So that was Article 9, which basically talks about what is the arm's length principle. And this is what we discussed. This is what it actually, talks about, that, there could be that because of some differences between how independent parties operate and how associated entities operate, there might be some differences in commercial or financial arrangements. And because of that, if there is a profit shortage, that profit will be added and then tax will be levied accordingly. So when we add back that particular profit, that is something called as primary adjustment. It's also called as transfer pricing adjustment. It's going to be in the last lecture that we will be discussing primary adjustment and secondary adjustment in a lot of detail. But right now you need to know the concept that when they add back that particular profit, that kind of transfer pricing adjustment that is provided in Article 9, and that is basically called as transfer pricing adjustment. And then over and above that, there is something called as secondary adjustment as well. We'll discuss that later. So this is the slide that we discussed for talking about the significance of the arm's length principle. And then we discussed some comparability factors. So these were the 5 comparability factors that we discussed in, the last lecture. They were talking about, the characteristics of, sorry, they're talking about the characteristics of property and service, when there are tangible property and when there are service and intangible property. They say that if you guys remember, it said that the product should be the same, that you're actually comparing. Then there was something called as functional analysis or FAR analysis, or functions, assets, and risk analysis, where they said that, if you're comparing a manufacturer, then you've got to compare it with a manufacturer itself. You cannot compare a distributor and a manufacturer. That is because the functions should be the same. Then we were discussing contractual terms, how the contractual terms, what related parties, what they put in the agreement, that has to be in sync with how they're actually conducting the transaction. After that, we were discussing economic circumstances. Remember, the location has to be the same. If you're comparing an India-USA transaction, if your related party transaction is India-USA, you need to compare it with India-USA independent party transaction. And finally, there was something called as business strategy, where we discussed that, you cannot compare a startup to a well-established company because the business strategies might be different for these two companies. This is what we discussed after that. Section 92, it was chapter 10, and this is what we were discussing in the last lecture. And then we started with this particular concept on associated enterprises. We were discussing section 92A, subsection 1, which basically talked about a general definition that, if one enterprise, it participates in the management, control, and capital of another enterprise, then they're going to be becoming related to each other. Or even if there is same person, and the same person participates in the management, control, and capital of company one, and the same person participates in the management, control, and capital of company two, well, then company one and company two will become associated to each other. Any questions till now?
No, ma'am.
Okay, thank you. Guys, I can at least, tell you one thing. If you just concentrate on these lectures, at least these 4 lectures, I can tell you that your entire transfer pricing at least, will be covered. I've put in so many questions, so many practice questions in these particular slides. And, if you just concentrate, because I'm also revising the previous lecture and, just taking you through what we discussed. So I somehow feel that you just need to concentrate on these, 4 lectures. And if there's anything that you want me to explain again, any concept that you feel that it should be taken over again or explained again, please just let me know and I'll be more than happy, to do it. Okay. After that, we were discussing section 92A, subsection 2, in which, there were these 13 instances, if you remember. And these 13 instances, they said that, if two enterprises, they fall under any of these 13 instances, then they will be called as deemed associated enterprises. This is, this particular concept is very important because I've seen, a lot of times from an examination point of view, I've seen a lot of questions being drafted on these, 13 instances to understand whether they are associated or not associated. I'm not saying that other concepts are not important because, over and over again, I've seen other concepts also come in exams, but this is, one concept that I've also seen come in exams. So, you could be given, like a small case study and asked if the two entities are associated or not associated. So I somehow feel that you have to, just remember all these things. So what was the shareholding that was required for association? How much percentage was required?
26.
Yes, that's absolutely correct. This is 26% that we were looking at. So if one enterprise holds 26% capital, share capital, and remember that they're talking about equity share capital. They're talking about share capital with voting rights out there. So if one entity holds 26% of another entity, they become associated to each other. And even if same person holds, 26%, then also they become associated to each other. What was the next condition was about loan. How much loan percentage do they require for association? Yes, that's okay.
51.
51%.
51%.
51% or more.
Exactly. So now this is, something that you guys have to remember, that they look for 51% or more than 51%. Generally, questions are drafted where, the exact percentage will be 51%. And then, you might get confused. Was 51% included or was it not included? Was it more than 51% or was it 51% or not? So what was provided here was 50%, 51. It's actually provided here 51% or more. Another thing that you have to remember is that they're looking at the book value of the total assets. They're not looking at, the market value of the assets. They're looking at the book value, 51% of the book value of total assets. So, a lot of times questions try to confuse you up saying that market value of asset is this one, this much, book value of the asset is this much, valuation from another expert on the assets is this much. But what you have to look at is the book value. So remember that. So yes, that is that. The third one, the fourth one, sorry, was actually guarantees. And for guarantees, they were looking at 10% or more of the total borrowings of the other enterprise. So if it is a guarantee question, just remember that you need 10% or more than 10%. They'll still qualify as associated entities. Then for management, if it is board of directors, do you think 50% will make them associated?
More than half.
Yes, exactly. So it's going to be more than 50%. At 50%, association will not be met. So 50%, they will not be considered as associated entities, but it is only more than 50% that they will be considered as associated entities. And how about executive directors?
One or more.
Yes, exactly. One or more executive directors that will be considered as associated entities. Then for, this was the definition on control. Now for control, remember that if one entity is using the intangibles of another entity, how many intangibles in percentage do they need to hold?
There is a specific percentage given. It is fully dependent, 100%. I mean, you can.
Yes,
100%.
yes, that's absolutely correct. If one entity is using another entity's intangibles, then they say that you have to be wholly dependent. Wholly dependent means 100%. So we're looking at 100% dependence on intangibles. Then they say that supply of raw materials. So if one entity is actually supplying raw materials to another entity, then 90% or more is absolutely fine. So 90% they will become associated, 90% or more they will become associated. And then prices and other conditions are influenced by such another enterprise. Then if it is for manufacturing and processing, then they say that, goods manufactured or processed by one enterprise, they're sold to another enterprise, etc. So everything that you're manufacturing, it is sold to another enterprise. Then we were also discussing this condition on common control by individual and relative. Remember the question that, there was a managing director, they held one company, and then the managing director's daughter was holding another company. So these two companies got associated to each other. Why? Because there was common control by the individual and the relative put together. Then there is common control by the HUF and or the relative. So if HUF controls A Limited, member controls B Limited, then A and B will become associated to each other. And for AOP BOI, just remember holding 10% or more interest, that was sufficient for control. Now, one thing that I wanted to just pinpoint here was I wanted to ask you all one question out here. Let's say that, I have an enterprise and I'm holding 28% equity share capital in that enterprise. So let's say company A holds 28% equity share capital in company B. Now, throughout the year, this kept happening. And then on 30th of March, which was, close to the year ending, or let's say 31st of March, the shareholding actually became 21%. So I'll repeat myself again. Throughout the year, company A held 28% in company B. But on 31st of March, which was, the closing, that particular time, company A held 21% share capital, equity share capital in company B. Now, are they associated or not?
Yes, they are associated because here it is given at any time during the previous year. So if any one day or also if they are like satisfying any of that criteria, they will be termed as associated throughout the year.
Absolutely. That's absolutely correct. So I wanted to pinpoint this very small thing in law. It says at any time during the previous year. So, even if they were holding that particular equity share capital, 28% share capital for even one day during the entire year, they would have had been associated enterprises for the purposes of Indian transfer pricing law. So just remember, it says at any time during the previous year, if they are meeting any of these criterias of capital, of management, or of control, then the association will be met. I can tell you, from a practical standpoint, there is a lot of litigation on this aspect because, some people feel that it's very difficult that even for because of one day, you'll have to file compliances, etc. So there has been a lot of litigation on this aspect. I'm not going into that kind of detail, but yes, the law says that even for one day, if association is met, then for the entire year, you'll have to undertake transfer pricing compliance for that particular company. Any questions till now?
Ma'am,
Yes.
in section 92A, subsection 2I, it is said that
Yes.
so goods manufactured or processed by one enterprise are sold to the other enterprise, but here it is not given the percentage like the above age clause. So in practical life, are there any litigations going on? Because even if we sell one unit to that other enterprise, we'll have to, unnecessarily get into the ALP compliance. Don't you think it's a bit harsh?
So, the entire compliance, when it comes to all these associations, we've got just one clause on which we have the maximum litigation in India, and that's actually this particular clause. And, the problem is not that because they've mentioned good manufactured or processed are sold to another enterprise. That's not really the problem. It says that it says that and right here, and then they say the prices and other conditions relating to are influenced by such other enterprise. So, to prove that the price at which this enterprise, which has manufactured, is selling to another enterprise, it's actually influenced by the other enterprise. And then they say, even if price was not sufficient, it says, and other conditions relating to supply are also influenced. This is where all the problem actually arises, because the TPOs generally say that, yes, the price and other conditions relating to supply, let's say the credit period or, the terms and conditions of supply are actually influenced. But this is where the assessee will have to, step in and say that how they are not influenced by the other enterprise. So, the first part is actually fine. If we sell it to, let's say that there is some X Limited and it's actually selling to some random Y Limited, that's absolutely fine. But then the problem really arises is to actually prove that Y Limited was not influencing the price of X Limited. Otherwise, if they were influencing, they become related to each other. So yes, you are right. There's a lot of litigation that happens on this particular clause, but it's mostly because of the second, line in this particular clause. Shall I move to the next one?
Yes.
Okay, thank you. Any other questions? Sorry. Okay.
No, ma'am. No, ma'am.
Thank you. Okay. Now we move to a new topic for today, and this is where we start with the concepts for today, and this is on international transaction. Now the concept of international transaction, it is provided in section 92B of the Income Tax Act. Just remember 92A. A is for associated enterprises, and then the second one, which is section 92B, this is for international transactions. Why are we discussing the definition of international transaction? Because, even if we find that two entities, they are associated to each other, but if they are undertaking a transaction which is not an international transaction, well, then no transfer pricing compliance, because transfer pricing compliance comes into existence only when there is associated enterprises and there is an international transaction out there. So what does section 92B say? Well, section 92B is very, very extensive out there. When I say that it's very extensive, it's very elaborate. It basically means, that before, I'll tell you, just give you a little context. It was before 2012 that we had just, like a few transactions which were considered as international transaction. But in 2012, they came up with, some amendments in this particular section, and they introduced a lot more, transactions within the purview of the term international transactions. So this particular section says that when there is transaction between two or more associated enterprises, either or both of whom are non-residents, well, then it's going to be an international transaction, but they have to be in the nature of these particular transactions. This is one statement. I'm going to explain this statement in slide 52. So I'll explain this statement in slide 52. But right now, this particular slide says that what are the kinds that are becoming international transactions. So the first thing that they say is any tangible property transaction. Very basic, if there is one entity, let's say a parent company, and the parent company is selling a tangible asset, when they're selling a vehicle, or they're selling machinery to a related party, a subsidiary, it becomes an international transaction. But you have to make sure that these two entities, one of them is a non-resident out here. This could be anything. It could be a purchase transaction. So the parent company is purchasing from the subsidiary company, or between two subsidiary companies, they're either purchasing or they're selling, or they're transferring a tangible property, etc. Anything like that, or they're leasing a tangible property. It's absolutely fine. It's going to become an international transaction. Then they say that there is an intangible property. So even if they have a transaction relating to intangible property, let's say that the parent company is actually selling its intangible, it's selling its patent to a subsidiary company, it's going to become an international transaction. Let's say that the parent company has a patent, and it's actually giving the right to use that particular patent to the associated entity, to like a subsidiary, then also it's going to be an international transaction. So whether you are transferring the ownership of the patent, or you're giving someone the right to use that particular patent, it's still going to be an international transaction. Then they started introducing very technical things into the concept of international transaction. So they say that even transactions relating to capital financing, they are also international transactions. So let's say, like a parent company providing loan to, a subsidiary company, or one subsidiary company providing loan to another subsidiary company, or, like a borrowing transaction, a guarantee transaction. So even if, parent company is providing guarantee to a bank on behalf of a subsidiary company, that's also going to be an international transaction. This is very interesting, but now, after the Vodafone amendment, they basically say that even issue of share transaction, so if the shares are being issued, that also is going to be an international transaction out there. Now, what is very interesting is, do you see these terminologies here? Advances, receivables, etc. So it basically talks about outstanding receivables and outstanding payables. So let's take an example. Year one, I have two transactions with a particular entity. I have provided, services to my, I have provided services to my parent company. So I am a company in India. I have provided IT service to my USA company. The USA company did not pay me then and there, so I have in my balance sheet on year end, I have some outstanding receivables. You know that this is the amount that I will be getting from my USA parent company. Now, year two, I still have outstanding receivables. The transaction is not there, but I still have outstanding receivables, and no other transaction with this particular entity. Now, the law says, which is section 92B, it says that even for that balance which is occurring in your balance sheet, that outstanding receivables that is occurring in your balance sheet, you'll still have to undertake, transfer pricing compliance. And that is because advances and receivables, they are considered as an international transaction as per section 92B. So even if there is no other transaction, but just this outstanding transaction, you'll still have to undertake transfer pricing compliance. Any questions here? Okay. So, in all, just to summarize this, अगर बैलेंस शीट में आउटस्टैंडिंग रिसीवेबल्स भी हैं, then also it's going to become an international transaction as per section 92B. The next one talks about provision of services. So very, very simply put, if there's a parent company, it's providing IT services to the subsidiary company, or one subsidiary company is providing IT service, market research service, technical service, legal service, accounting service, then also it's going to become an international transaction. And finally, section 92B says that if there is a transaction of business restructuring or reorganization with associated enterprises, then also it's going to become an international transaction. Can someone give me an example of business restructuring transaction?
Amalgamation, demerger.
Yes, exactly. Yes, that's correct. So what they're really trying to say is that, let's say that there are two associated entities and they are merging together to form a new associated entity. That is going to be a transaction of business restructuring, and that is also considered as a valid international transaction for the purposes of section 92B. So what I'm really trying to say is that on a whole, these are the kind of transactions that can really happen between two associated entities, and as long as these transactions are provided in section 92B and these are between associated entities, transfer pricing compliance will have to be undertaken going forward. So that is what it basically tries to say. This is on the next slide is section 92B. This is how section 92B is worded. And after that follows this particular slide on the kind of international transactions, that are there. I have summarized this particular concept. This is what we discussed, either or both of whom are non-residents. I'm going to talk about this in slide 52, as I mentioned. And this is where it says that it is in the nature of purchase, sale, lease of tangible property, intangible property, provision of services, borrowing, lending of money, etc. This is where they've mentioned about this is where they've actually mentioned about, all these kind of transactions. So yes, this is section 92B. नेक्स्ट क्वेश्चन आता है कि ट्रांजैक्शन क्या है. सो आई डू अंडरस्टैंड दैट दिस इज इंटरनेशनल ट्रांजैक्शन, बट क्वेश्चन आता है व्हाट इज अ ट्रांजैक्शन. एनी आइडिया? Okay. So
Ma'am,
this,
can it be, sorry, you want,
no, please go ahead.
transaction can be in loose terms be defined as a arrangement where or an event which will happen where two or more parties are involved and which involves rights or obligations on either of the parties that can be considered as a transaction.
Yes, absolutely correct. So yes.
Any action legally enforceable.
एग्जैक्टली कोई भी एक्शन हो, अगर वो लीगली एनफोर्सिएबल हो, जनरली वी कंसिडर दिस एज बेसिकली अ ट्रांजैक्शन. बट इट्स वेरी इंटरेस्टिंग बिकॉज ट्रांसफर प्राइसिंग में सेक्शन 92F में दे हैव डिफाइंड ट्रांजैक्शन, एंड वेरी सरप्राइजिंगली व्हाट दे से इज transaction, yes, it's more like an arrangement, but it's not necessary that it has to be in writing or it has to be formal. It's not even necessary whether it is enforceable by legal proceedings or not. मतलब कि transaction is an arrangement, इतना ठीक है, because in all the laws you would see that transaction is an arrangement. In contract law, in company law, you'll see that transaction is an arrangement. But for transfer pricing purposes, transaction बहुत specific है, and they say अगर transaction writing में है, formal है, अगर ट्रांजैक्शन राइटिंग में नहीं है, देन ऑल्सो इट विल बी कंसिडर्ड एज अ ट्रांजैक्शन. अगर ट्रांजैक्शन लीगली एनफोर्सिएबल है या नहीं है, दैट डज नॉट रियली मेक अ डिफरेंस, एज लॉन्ग एज वो ट्रांजैक्शन दो एसोसिएटेड एंटिटी के बीच में है, इट विल बी कंसिडर्ड एज अ ट्रांजैक्शन ट्रांसफर प्राइसिंग पर्पसेस के लिए. सो दिस इज व्हाट दे रियली ट्राइंग टू से. So you should read through section 92F, which says the meaning of transaction. इट इज नॉट नेसेसरी दैट अ ट्रांजैक्शन जो दो एंटरप्राइजेस के बीच में है वो फॉर्मल रिटन है या नहीं है, अगर वो लीगली एनफोर्सिएबल है या नहीं है, बिकॉज ऑब्वियसली अगर लिखित नहीं है, अगर वो राइटिंग में नहीं है ट्रांजैक्शन, देन ऑल्सो इट्स नॉट लीगली एनफोर्सिएबल. सो वेदर इट इज लीगली एनफोर्सिएबल और नॉट, इट डज नॉट रियली मैटर. राइटिंग में है या नहीं है, इट डज नॉट रियली मैटर. बट as long as वो transaction अकर हुआ है and the transaction have gone into the books of accounts, that's absolutely enough for that particular transaction to have a transfer pricing compliance out there. So this is what section 92F really is trying to say. Sorry, just to the next slide. So this is what they're really trying to say, This is what is meant by a transaction. Okay. Now, this is where I wanted to talk about, all this while you've been seeing that the concept of international transaction really says that, you want either one enterprise to be a non-resident or even both the enterprises to be non-resident, then it will be considered as an international transaction. So the definition of international transaction, it actually starts with the concept saying that one of the parties at least should be a non-resident. So that basically means, let's say एक resident assessee है A लिमिटेड, इंडियन कंपनी A लिमिटेड. A लिमिटेड इंडियन कंपनी के बहुत सारे फॉरेन ब्रांचेस हैं आउटसाइड इंडिया, ऑब्वियसली बिकॉज दे आर फॉरेन ब्रांचेस. नाउ द क्वेश्चन इज, अगर इंडियन कंपनी A लिमिटेड अपने फॉरेन ब्रांचेस के साथ कोई भी ट्रांजैक्शन करती है, क्या ये इंटरनेशनल ट्रांजैक्शन होगी या नहीं? Do you think if A Limited gets into a transaction with its foreign branches, do you think that will be an international transaction or not? Any perspective? Okay, I'm just reading through the chat box, and okay, I have one answer. Anyone else? Okay, so we go back again to this question. Let's say that there is an Indian company A Limited and it has foreign branches out there. Well, the point is that this will not be considered as an international transaction. Why? Aren't they talking about foreign branches? So how is it that this is not an international transaction? Well, that is because if there is a foreign branch, the foreign branches of an Indian company, they are considered as residents in India. And if the foreign branches are considered as residents in India, well, then the transaction between this A Limited and its foreign branches, it's basically a transaction between two Indian companies, and that will always not be within the purview of an international transaction. मैं फिर से बताती हूँ, अगर A लिमिटेड एक इंडियन कंपनी है और उसकी बहुत सारी फॉरेन ब्रांचेस हैं, फॉरेन ब्रांचेस इंडियन टैक्स लॉ के लिए इंडियन कंपनीज मानी जाती हैं बिकॉज वो रेजिडेंट होती हैं इंडिया की. सो फॉरेन ब्रांचेस रेजिडेंट्स होती है इंडिया की फॉर टैक्स लॉ पर्पसेस, एंड दिस इज द रीजन एक इंडियन कंपनी A लिमिटेड अगर उसकी फॉरेन ब्रांचेस हैं which are considered as resident in India, well, they're not considered as international transaction because this transaction में कोई भी non-resident नहीं हुआ. So just remember that this terminology that they're talking about is non-resident. We're talking about place of effective management kind of tests for non-residents, and branches, they are considered as residents of India. This is the reason that this is not going to be considered as an international transaction. But very strangely, they basically say that, let's say that we have a foreign company. Now, B Incorporation, this is a foreign company which is in USA, B Incorporation. Now, if B Incorporation has some Indian branch, well, that Indian branch, can you tell me what will the Indian branch be considered? So when we have a foreign company and they have some office in India, what is the Indian office called? From a tax law perspective?
Permanent establishment.
Yes, that's absolutely correct. So the Indian branch will be called as a permanent establishment, and then that will be considered as an international transaction. Why? Because the permanent establishment in India, that will be treated as an Indian company, and obviously B Incorporation was in USA. So that is considered as an international transaction because there is a foreign company out there. So these are, some of the nitty-gritties that you have to keep in mind. मैं फिर से बताती हूँ, just to, summarize all this. अगर एक इंडियन कंपनी है, इंडियन कंपनी की बहुत सारी फॉरेन ब्रांचेस हैं, तो फॉरेन ब्रांचेस जो हैं वो रेजिडेंट मानी जाती हैं बिकॉज फॉरेन ब्रांचेस किसकी हैं? इंडियन कंपनी की हैं. तो इंटरनेशनल ट्रांजैक्शन नहीं होएगा बिकॉज सारी इंडियन कंपनीज मिक्सअप हो गई हैं और इसमें कोई भी नॉन रेजिडेंट नहीं हुआ. बट अगर कोई बाहर की कंपनी है, कोई फॉरेन कंपनी है, वेल और उसकी इंडियन ब्रांच है, वेल देन एक इंडियन ब्रांच हो गई और एक फॉरेन ब्रांच हो गई। जो फॉरेन ब्रांच है वो नॉन रेजिडेंट है, तो इसको इंटरनेशनल ट्रांजैक्शन माना जाएगा। अगर आप फॉरेन ब्रांच को लो और इंडियन ब्रांच जो परमानेंट एस्टैब्लिशमेंट है उसको लो, वेल देन दैट पर्टिकुलर ट्रांजैक्शन विल बी लायबल टू ट्रांसफर प्राइसिंग कंप्लायंस, बिकॉज ये इंटरनेशनल ट्रांजैक्शन मानी जाएगी। So this is one of the concepts that you have to keep in mind. Any questions?
Ma'am, in the second example which you gave of a Indian branch of a foreign company, so this Indian branch is considered to be a separate,
Yes.
like there are two separate entities are seen, or it's just like be limited as a whole?
No, because Sarah, the entire concept of permanent establishment is that the permanent establishment is a separate and distinct entity. That is the reason that the branch in India, which is the permanent establishment, they have their own tax liability in India. And this entire concept of Article 7 comes into place, where we have force of attraction rules, and we have how much is the profit attributable to in India, etc. वो सारा concept आ जाता है. That is because ये जो इंडियन ब्रांच है, that is considered as a separate and distinct entity as compared to the foreign entity, and this is the reason this is going to be called as an international transaction.
Ma'am, like in India, this is the situation, but in some countries, maybe they may be considering as one only. And I mean, only Indian branch is considered the same as foreign company. Can that be also possible?
Yes, that's absolutely possible. And this is the reason your question is so relevant, because of this kind of scenario, we have the concept of double taxation come into play. And that is the reason we go to a DTAA to see where exactly taxes will be paid. And that is the reason we go to Article 5 of a DTAA. So that's a very, very relevant, it's a very practical scenario that we actually face.
Ma'am, one more thing. In this first example, when we say that A Limited and its foreign branch will not be, associated, like will not be considered as a international transactions, so the Indian income tax law will be applicable on them. And then, that section 40 capital A, that these transactions should be at arm's length price, that will come into picture, no, for this?
So many things out here I want to tell you. Very pertinent question, very good question. There is a concept in India called specified domestic transaction, meaning to say very casually, we call it domestic transfer pricing, because अभी तक जो हम transfer pricing पढ़ रहे हैं वो international transfer pricing है, international, company चाहिए है और non-resident चाहिए. But the kind of transfer pricing that we have in India is also domestic transfer pricing, meaning to say दो इंडियन कंपनीज के बीच में भी ट्रांसफर प्राइसिंग लग सकता है. Now in 2017 they made some amendments to law. 2017 से पहले this would have been within the purview of section 40A2B. इसके ऊपर section 40A2B लग सकता था. But after 2017 they deleted 40A2B, and now domestic transfer pricing is applicable only if this is a tax holiday unit. So अगर इन दोनों कंपनीज में से जो ब्रांच है और जो ए लिमिटेड कंपनी है, इनमें से अगर एक भी कंपनी ने टैक्स हॉलिडे एग्जेम्पशन लिया है, सेक्शन 80IA वगैरह वाले एग्जेम्पशंस लिए हैं, देन दिस विल बी कंसिडर्ड अंडर डोमेस्टिक ट्रांसफर प्राइसिंग. ट्रांसफर प्राइसिंग इसके ऊपर लगेगा, बट राइट नाउ इसके ऊपर ट्रांसफर प्राइसिंग नहीं लगेगा. अगर आप ये क्वेश्चन मेरे से 2016 तक पूछते, if you had asked me this question in 2016, I would have told you that yes, you are absolutely right, they will be within the purview of section 40A2B. But then they deleted section 40A2B from the purview of domestic transfer pricing.
Ma'am, if this Indian branch is not it's not enjoying some benefits of tax like exemption,
Yeah.
then which section will apply?
Then transfer pricing will not apply.
Okay.
Yeah, right now transfer pricing will not apply. In 2025, yes, Hanji.
Ma'am, can you please explain these with some comparable table, like कि मतलब फॉरेन कंपनी है, इंडियन कंपनी है. अभी मैम इंडियन कंपनी है और उसकी कोई फॉरेन ब्रांचेज है, तो उसके बीच में ट्रांजेक्शन होगा तो वो तो नहीं लगेगा ना मैम वहाँ पे ट्रांसफर प्राइसिंग?
नहीं लगेगा।
फॉरेन कंपनी के इंडियन ब्रांच है तो उसमें लगेगा।
यस, हाँ उस पे लगेगा। और this entire concept on specified domestic transaction, मैं I will be covering this up in the next lecture. As I mentioned to you guys, I think before also, I will be covering specified domestic transactions, later on in a lot of detail. I have so many practice questions also on this particular concept, so we'll discuss it later. But then for now, we want to concentrate on international transfer pricing.
Okay.
Up the next concept that we have is very interesting. It's I think you will find it very interesting because it talks about a concept which is called as deemed international transaction. This is section 92B, subsection 2 of the Income Tax Act. So coming back, subsection 1, it talks about international transaction, and that's where they define what an international transaction is. So अभी तक हमने जितने भी examples पढ़े थे, tangible property, intangible property, capital financing, business restructuring, etc., वो सारे थे international transaction. But now subsection 2 में एक और चीज आ जाती है which is called as deemed international transaction. So you will find, after I explain it through this particular case study, you will find that ये transaction international transaction नहीं होगी, but the law has put in a deeming fiction here. Law ने एक deeming fiction लगाया है और बोला है that we'll presume these transactions to be an international transaction. So let's see what these transactions are all about. Well, let's say that there is an Indian enterprise. एक Indian enterprise है और एक foreign associated enterprise है. Now, अगर ये दोनों transact करते हैं, if the Indian enterprise transacts with the foreign associated enterprise, do you think transfer pricing will be applicable?
No, ma'am.
Why?
Yes, it will be applicable because they are associated.
Yes. So look at two words here. Foreign, that means international, and associated. So associated is also there. Yes, बताइए.
इंडियन एंटरप्राइज का फॉरेन एसोसिएट्स का होगा तो मैम फॉरेन एसोसिएट्स भी रेसिडेंट नहीं बन जाएगा?
नहीं, ये दोनों अलग एंटरप्राइजेस हैं. we're not talking about branches here, बट हम बता रहे हैं कि एक इंडियन एंटरप्राइज है, लेट्स से कंपनी एक्स, और
Okay.
एक उसकी कंपनी वाई है जो यूएसए में इनकॉर्पोरेटेड है और वो एसोसिएटेड है इससे. अब मैं ये
जी.
नहीं बता रही कि कैसे एसोसिएटेड है, मे बी
नहीं, नहीं,
26%.
फिर लग जाएगा मैम, फिर लग जाएगा.
हाँ हाँ, तो कैसे एसोसिएटेड है वो अलग है. बट अगर ये दोनों एसोसिएटेड एंटरप्राइज है और इंटरनेशनल ट्रांजैक्शन है, देन ऑब्वियसली दे विल बी विद इन द पर्व्यू ऑफ ट्रांसफर प्राइसिंग. अगर इनके ऊपर ट्रांसफर प्राइसिंग लग गया, दे विल हैव टू अंडरटेक ऑल द कंप्लायंसेस आउट देयर. दे विल हैव टू फाइल द transfer pricing return. They'll have to do everything out there for transfer pricing purposes. This is the reason they come up with a strategy out there. And what is the strategy? एक strategy बनाते हैं. They say एक काम करते हैं, let's make the Indian enterprise transact with an unrelated person here. हम कोशिश करते हैं कि इंस्टेड कि ये दोनों ट्रांजैक्शन करें आपस में, लेट्स मेक श्योर कि इंडियन एंटरप्राइज एक दूसरी अनरिलेटेड पर्सन के साथ ट्रांजैक्ट करे. ये भी कहीं बाहर है. दिस इज नॉट इन इंडिया, दिस इज आउटसाइड इंडिया, समवेयर एल्स. एंड दीज टू एंटरप्राइजेस, दे आर नॉट रिलेटेड टू ईच अदर. सो द इंडियन एंटरप्राइज and the unrelated person, they are not related to each other. Do you think transfer pricing will be applicable here? Do you think transfer pricing will be applicable if the Indian enterprise transacts with the unrelated person? No, this will not be applicable. But they decide that whatever is the price at which the Indian enterprise and the unrelated person transact at, that will be determined by this foreign enterprise. Meaning to say कि let's make sure, हम ये कोशिश करते हैं कि इंडियन एंटरप्राइज ये अनरिलेटेड पर्सन के साथ ट्रांजैक्ट करे, बट जो भी प्राइस या जो भी टर्म जिसमें ये दोनों ट्रांजैक्ट करेंगे वो डिटर्मिन होगा फॉरेन एसोसिएटेड एंटरप्राइज से. So isn't it like that these two are transacting with each other, and for the law they have just put in this particular party out here?
मैम ये डीम्ड इंटरनेशनल ट्रांजैक्शन में आ जाएंगे.
Exactly. So then this will become deemed international transaction. मैं फिर से बताती हूँ. If these parties they transact between themselves, अगर ये दोनों पार्टीज ट्रांजैक्ट करते हैं तो ट्रांसफर प्राइसिंग लगेगा। दिस इज द रीजन इंडियन एंटरप्राइज बोलती है कि मैं एक काम करती हूँ, मैं ये अनरिलेटेड पर्सन के साथ ट्रांजैक्ट करती हूँ। उसका क्या फायदा होएगा? वेल, ट्रांसफर प्राइसिंग नहीं लगेगा। बट उसका फायदा क्या होगा? द फायदा ये होएगा कि जितने भी प्राइस पे हम ट्रांजैक्ट करेंगे वो सारा ये डिटर्मिन करेगी, ये बताएगी कि हम किस प्राइस पे ट्रांजैक्ट करेंगे, क्या क्रेडिट पीरियड पे ट्रांजैक्ट करेंगे, क्या अग्रीमेंट होगा ट्रांजैक्शन का, वो सारा कुछ ये डिटर्मिन करेगी। तो ऐसा नहीं लग रहा कि ट्रांजैक्शन इनके ही बीच में हो रही है और ये बस प्रिटेंड कर रहे हैं, ये बस दिखा रहे हैं लॉ को कि ट्रांजैक्शन इनके बीच में हो रही है सो दैट ट्रांसफर प्राइसिंग ना लगे। Then this is the reason law came into place, and they said that this particular transaction between the Indian enterprise and the unrelated person, this will be called as deemed international transaction. They said that we do understand that these are not related to each other, these are unrelated, and this can never be an international transaction. But we'll just presume it for tax purposes that the transaction between the Indian enterprise and the unrelated person, this is a deemed international transaction. And if this becomes a deemed international transaction, all the transfer pricing compliances will be applicable onto this particular transaction also. Any questions here?
मैम, ये हमारे इंडियन एंटरप्राइज और अनरिलेटेड के बीच के ट्रांजेक्शन पे टीपी लगेगी, पर क्या ये फॉरेन एसोसिएट एंटरप्राइज और अनरिलेटेड पार्टीज में भी लगेगा टीपी?
नहीं,
ये
उसमें नहीं लगेगा, उसमें नहीं लगेगा। उन्होंने तो खाली एक अग्रीमेंट करा, देर नॉट इवन ट्रांजैक्टिंग विद ईच अदर, वो ट्रांजैक्ट नहीं कर रहे। उन्होंने तो बस एक अग्रीमेंट करा कि हम देखते हैं कि किस प्राइस पे इनके बीच में ट्रांजैक्शन होगी। मैं अभी बहुत सारे एग्जांपल्स लूंगी इस क्वेश्चन के लिए, इस कॉन्सेप्ट के लिए मैं बहुत सारे एग्जांपल लूंगी, बट अभी कॉन्सेप्ट बस क्लियर होना चाहिए। यू शुड बी एबल टू अंडरस्टैंड द कॉन्सेप्ट दैट दीज टू एंटरप्राइजेस, दे आर नॉट रिलेटेड टू ईच अदर। आइडियली ट्रांसफर प्राइसिंग नहीं लगना चाहिए इन दोनों के ऊपर, बट बिकॉज ऐसा लग रहा है कि ये बाईपास कर रहे हैं लॉ, एंड दिस इज द रीजन देव इनकॉर्पोरेटेड दिस पर्टिकुलर एंटिटी हियर, ट्रांसफर प्राइसिंग इनके ऊपर भी लगेगा। बिकॉज हम प्रिज्यूम करेंगे, हम डीम करेंगे कि ये एक इंटरनेशनल ट्रांजैक्शन है इधर।
Ma'am, one question.
Yes,
In this
any
case,
question, we'll take it.
ma'am, in this case, does that Indian enterprise will still have to show this foreign associated enterprise in its compliance that it has not done any transactions with this enterprise throughout the year?
No, this will not be, they will don't have to. So, practically what happens is there might be a situation that in our financial statements, we have AS 18, which talks about related party transactions. And in that particular schedule, we might have like a lot of related parties. But then if you have not undertaken a transaction with that particular related party or that particular associated entity, then you don't file transfer pricing compliances. So it is transfer pricing compliances is filed only if two conditions are met. One, they are associated, and there has to be a transaction between these two. So for your question, no, this will not be within the purview of transfer pricing compliances in India.
And
मैम,
ma'am, how do this transactions, is this catched by AO? Like, is it, so how does it,
So many things, from a practical standpoint, we have to look at intercompany agreements. If you look at intercompany agreements, generally, I'll just give you an example from my practical experience. Now, intercompany, I was looking at this particular intercompany agreement between these two companies, because this is easily available. Let's say that this Indian enterprise was my client. So I said, do you have an intercompany agreement with this particular company? They said that yes. Then I asked, do you have an intercompany agreement with this company also? They said yes. When I looked at this particular intercompany agreement that this Indian enterprise had with an unrelated person, because they had transacted, and I wanted to understand that if you have a transaction between these two enterprises, can I see the company agreement, which will say what kind of transaction, what is the price, etc. When I looked at the intercompany agreement, ideally every intercompany agreement should say that we will transact at an open market price, etc. But strangely, this intercompany agreement said that the price at which we will transact will be determined by this particular company. That's where I noticed that maybe this is a deemed international transaction. And that's where all the concepts really started. I mean, all the the scrutiny really started. So ideally, if it is a deemed international transaction, it should be disclosed by the taxpayer itself. In India, we have something called a self-assessment. You are supposed to disclose it even if this is a deemed international transaction. But otherwise, yes, it is going to be the TPO's prerogative to actually open this kind of transaction. Yeah. But then there
Ma'am,
will be a lot of penalties because disclosure, etc., is not there. Disclosure was not there. You did not disclose the deemed international transaction, etc. That's a different thing altogether. Yes,
ma'am, whether unrelated person is resident or non-resident?
I am coming to that. In the next slide, I will just talk about this. Just give me 2 minutes. Any other question? Was I able to answer your question? Okay. I'm going to see if there are questions on the portal as well. Just give me a minute. Okay. Yes. So coming back, this is what a deemed international transaction look like. Now, I would strictly and very, very sincerely advise you that this is how the law is drafted. This is section 92B of the B subsection 2 of the Income Tax Act. When you read through this is what I've explained in detail. But when you read through this, please keep this diagram in mind. So keep this diagram and use the act or use the the CA manual and then read this particular law, because otherwise if you read it, it's going to become very confusing. So let's take a minute, just take 1 minute to read through this entire concept. Let's take 1 minute. I'm giving you one minute. Read what is written on the screen. Do you think it's very confusing? Okay, let's read it together. It says a transaction entered into by an enterprise with a person other than associated enterprise. So that means a transaction which is entered by this enterprise with a person other than associated enterprise, meaning which enterprise? Unrelated person. So ये दोनों की transaction, this will be called as a deemed international transaction when, if there exists a prior agreement in relation to the relevant transaction between such other person and the associated enterprise. So they're really trying to say that this transaction will be called as a deemed international transaction कब? जब there is a prior agreement. किसके बीच में prior agreement? Well, other person एंड एसोसिएटेड एंटरप्राइज. जब इस ट्रांजैक्शन को लेके इन दोनों एंटरप्राइजेस में प्रायर एग्रीमेंट है, यही बता रहे हैं कि आपको ये वाली एंटरप्राइज किस ट्रांजैक्शन पे डील करनी है, किस प्राइस पे डील करनी है, देन दिस विल बी कॉल्ड एज डीम्ड इंटरनेशनल ट्रांजैक्शन. और if the terms of the relevant transaction are determined in substance between such other person and the associated enterprise. अगर इस transaction के terms and conditions ये determine करते हैं, ये foreign associated enterprise और unrelated person determine करते हैं, तब भी इंडियन एंटरप्राइज और ये अनरिलेटेड पर्सन की जो ट्रांजैक्शन है, ये डीम्ड इंटरनेशनल ट्रांजैक्शन मानी जाएगी. So that is what they're really, trying to say. But you have to see a few things out here. One, they say that there is a prior agreement. Okay. I'll take a question here on slide 57, which talks about prior agreement. Or they say that the terms of the transaction are determined in substance. What do you think is the meaning of the term in substance? In substance का meaning क्या है? Terms of the transaction are determined in substance. What is meant by in substance? In perspective, yes.
मतलब principal transaction मतलब main transaction, material transaction.
Okay.
Listing out the what do you say, the written form and finding out who exactly has done that. Like how we say, listing of the corporate feed to find out
Yes.
exactly who has done that.
Okay. Okay. I think what they're really trying to say is that, for a particular transaction, there are a lot of terms and conditions. What are the terms and conditions of a transaction? Well, what is the price at which you're transacting? What is the credit period, etc. So price is very, very determined in substance. Price is an important thing. So they're really trying to say is that whatever are the terms and conditions, whatever are the important terms and conditions that are actually determined between this and this company. So they're really trying to say is that whenever there is a transaction, there are terms and conditions. जो भी terms and conditions important हैं, कैसे important हैं? Well, price बहुत important है, credit period बहुत important होता है because credit period has an impact on the price. Quantity discounts कितने मिल रहे हैं, that is also very important. So जो भी important होता है transaction के लिए, if that is determined by the foreign associated enterprise and the unrelated person, well then this is going to be a deemed international transaction. And then they say whether the enterprise or the associated enterprise or both of them are non-residents, irrespective of whether such other person is a non-resident or not. Now, this is an amendment that came in very recently. Sorry, not recently, in 2014. So it's been about 10 years. But initially, law was drafted in a manner that they said that the unrelated person has to be a non-resident. But now they've come to a point that it does not really matter whether this unrelated person is a resident or it is a non-resident, still it's going to be a deemed international transaction. So I'll give an example for this. Let's say that this is the amendment that came in the year 2014. Now let's say that this is I company. I company is a wholly owned subsidiary of F company. So F company is the parent company and I company is the wholly owned subsidiary. So if these two companies, they transact with each other, obviously transfer pricing compliances will be there. So what does I company do? I company transacts with a non-associated entity here, like a third person. But the terms of the transaction will be determined by F company and this particular non-AE. So where is the deemed international transaction? किसके बीच में हुआ deemed international transaction? Put it on the chat box.
मैम इंडियन कंपनी एंड नॉन ए के बीच.
Exactly. So between I company and non-AE. That's absolutely correct. There are so many answers on the chat box and they're all very correct. So the deemed international transaction will be I company and non-AE. Now this is where the confusion started. You're talking about international transaction, but this is an Indian company, which is I company. And this non-AE, if you see, this is also in India. So how is it that the transaction between two Indian companies can be called as a deemed international transaction? तो दो तो resident companies हैं. Well, this is where the amendment came in the year 2014. And amendment said that even if this non-associated entity, even if this is an Indian company, it is a resident company in India, even then the transaction between two Indian companies will be called as a deemed international transaction. पहले था that non-AE को non-resident होना है. This is to be a foreign company out there. But then they expanded the scope of deemed international transaction and they said that no, अगर ये दोनों companies Indian company भी हैं, then also we'll call them a deemed international transaction. Any questions here? आई थिंक डज इट आंसर योर क्वेश्चन? इससे पहले क्वेश्चन था कि नॉन एई या फिर ये अनरिलेटेड पर्सन ये रेजिडेंट हो या नॉन रेजिडेंट हो. सो अब बेसिकली इस अमेंडमेंट के बाद फर्क नहीं पड़ता अगर ये रेजिडेंट है या नॉन रेजिडेंट है, इट डज नॉट मैटर.
Ma'am, in here, while we are talking about, we are always saying enterprise, associated enterprise. So enterprise always means a company or it can be any form of.
enterprise is a very, very wide definition that's provided in transfer pricing law, and it could be something else also other than a company also. So, permanent establishments, etc. These are also considered as enterprises out there. So, if I just take you through, I will, in the break, I will actually, I will put in the, page number where the definition of enterprise is actually mentioned. But enterprise is not just a company, it actually is a very wide terminology given to enterprise in India.
And ma'am, it is in the international transaction, like while we were doing that, it is said that any transaction between two non-residents can also be a international transaction. I mean, I'm not getting how, but then they are not residents also, na? So how can we trace? Because non-residents only Indian income is taxable as per the scope of income.
It's actually coming from, remember the Vodafone case,
Yeah,
section 911?
yes.
Yes, that's where it actually comes from. So that's why they say that this is going to be within the purview of an international transaction. Even if it's a transaction between two non-resident companies, but then if the source of income is actually India, then also it could be within the purview of a deemed international, an international transaction.
Ma'am, could you give an example of this in terms of a simple purchase or something like that?
So let's say it's I'll actually give you, let's say that there is, like a company in Mauritius. I'll give you the same example. I'll just make Vodafone very, very easy for you guys. Let's say that there is a Mauritius company, and the Mauritius company has a subsidiary in India. Okay. 100% subsidiary in India. Now, the Mauritius company, who owns the Indian subsidiary? Mauritius company, because yes, so it's the Mauritius company. It has an Indian subsidiary out there. It's a wholly owned subsidiary. So now the Netherlands company come in, and Netherlands company say that, I want to buy your Indian operations. So the Mauritius company, what it actually does is it actually sells off the Indian company. The Indian company is obviously held by the Mauritius company. The Mauritius company, it actually sells off the 100% shareholding that it has of the Indian company to the Netherlands company. So now if you see, the transaction is issue of shares. Issue of shares is a valid international transaction. What is the transaction between? Who are the two entities? Well, the Mauritius company and the Netherlands company. So both of them are non-residents. What is the subject of sale? The Indian company. So this will be within the purview of Indian income tax law as per section 911, and this will also be within the purview of transfer pricing.
Ma'am, understood. Thank you.
Thank you. Any other question on this concept? Okay, let's discuss an example here to understand what is a deemed international transaction again. In this particular example, let's say we have A Limited. Now, A Limited is an Indian company. A Limited has this particular product X. A Limited wants to sell this particular product X to this particular unrelated party, which is Mr. B. And this, they enter into an agreement for sale. This particular agreement for sale that, A Limited has agreed to sell this particular product X to Mr. B, ये हुआ 1st June 2023 को. So 1st June 2023 को A Limited ने product X B को बेचने के लिए agreement to sell करा. Now, B Limited has entered into an agreement for sale of product X with C Incorporation. So, B Limited says that there is an agreement to sale. I mean, you actually find it out later that B Limited has already a prior agreement with C Incorporation for agreement to sell product X. And this was entered into before 1st June 2023. This was entered into on 30th of May 2023. After this, you actually find out that C Incorporation and A Limited are actually related to each other, or they're associated to each other. How are they associated? A and C, how are they associated? Well, they're associated because A holds 27% voting share capital in C Incorporation. So A Limited is associated to C Incorporation. Now, this is where you actually find out that what if A, now how it's actually happening is that A is selling the product to B and B is selling the product to C and A and C are related to each other. तो अगर A और C transact करेंगे तो transfer pricing compliance लगेगा. This is the reason A comes up with a strategy. A says, I will sell to B because B is unrelated, and B will sell to C because B and C are actually, unrelated. So instead of, A selling to C, A says, I will sell to B and B will sell to C. This is where you realize that there was a prior agreement between B and C. B and C ने पहले ही एक agreement करा हुआ था कि 30th मई को उन्होंने एक अग्रीमेंट करा हुआ था प्रोडक्ट एक्स के लिए और इनका अग्रीमेंट एक्चुअली बाद में हुआ था. सो दीज गाइज बी एंड सी हैड डिसाइडेड इन एडवांस ऑन व्हाट इज द प्राइस एट विच दिस ट्रांजैक्शन विल हैपन. So isn't it looking like B has been incorporated just for this particular purpose? The deemed international transaction is there between A and Mr. B out there. Shall I explain this again?
Ma'am, but Mr. B is an individual, no?
Yes, it is covered under the definition of enterprise. So I'll explain it again. B, A and B are unrelated to each other. And obviously if, and then B and C are unrelated to each other. A and C are related to each other. They're associated enterprises of A Limited, which is C Incorporation. So if A and C, they transact between themselves, transfer pricing will be applicable. So A says that, listen, I will come up with a strategy. A will transact with B and B will transact with C. And whatever is the price at which A will transact with B, there was already a prior agreement between B and C on the price at which A and B will actually transact. This is the reason we actually feel that Mr. B was incorporated. Mr. B की presence का यही reason था so that transfer pricing compliances ना लगे. And this is the reason we will call the transaction between A Limited and B, Mr. B, as a deemed international transaction. Any questions here? Okay. Next is something which is not related so much, but this is where, from a wholesome standpoint, I thought I'll just introduce this particular thing. All this while I was telling you how international transaction also includes intangible property out there. So if you see the definition of international transaction, it said that intangible property is also there. Now, this is a change that happened in 2012 when they made a lot of changes. They made some changes in section 92B also, and they have incorporated the definition of intangible property in India. Now, the kind of definition that we have for intangible property in India is very, very wide. I think I've seen so many jurisdictions around the world. I have not seen any jurisdiction with a definition this wide out there. मैंने इतने jurisdictions देखे हैं. I think India की definition for intangible property is very, very wide. So intangible property from an Indian transfer pricing perspective includes marketing related intangibles. So, trademarks, trade names, etc. Technology related intangible, जैसे process, patents, etc. Then literary copyrights, musical compositions, maps, engravings, etc. Or computer software, automated databases, industrial design, trade secrets, customer list, customer contracts, union contracts, etc. या फिर leasehold interest, goodwill, etc. And there is a residual clause out here which says that if this was not enough, कोई भी other item जिसका जो content है that is actually driven by intellectual property rather than physical attributes. It's not physical in nature. That will also become an intangible property. So I just wanted to introduce this particular concept, that the kind of definition that we have in India for intangible property is very, very wide. Almost everything is actually covered under the terminology intangible property in India. And this is very relevant from transfer pricing perspective. Yeah.
अब is exclusive or inclusive list?
Oh, this is this is a very exhaustive list. That is because the definition of intangible property includes in this, it means includes. What is the relevance of providing this word here, includes? Anyone?
Inclusive.
Yes, exactly. That this is an inclusive definition. When they say that this is an inclusive definition, it basically means that अगर कुछ इधर नहीं भी लिखा और आपको लगता है कि वो intangible property जैसा है because वो अपनी value intellectual content से derive करता है rather than physical attribute, then that will also be covered in this particular definition. So if something derives its value from intellectual content rather than physical attributes, then that will also be covered in this particular definition of intangible property, even if it is not provided here, because this is an inclusive definition out there. Now, we will discuss some questions on associated entities, and then we will go on to the next topic, which is transfer pricing methods. So I've put in some questions here. The first question is, Mr. Hari, he holds 30% voting power in ABC Incorporation, a company incorporated under the laws of country A. For the purposes, so it's Mr. Hari. Mr. Hari holds 30% voting power in ABC Incorporation. For the purposes of expansion of business, the said company enters into an agreement with XYZ Limited, a company incorporated under the Indian laws. So ABC Incorporation, which is USA company, let's say USA company, it actually gets into an agreement with XYZ Limited, which is an Indian company. Now, as per one of the clauses of the agreement, ABC Incorporation has the power to appoint 6 directors of XYZ Limited, which has 12 directors on board. Do you think, okay, we'll go further. Further, the total purchases of XYZ Limited for the financial year 24-25 is estimated to be 500 crores, out of which purchases of 48 crores has been sourced locally, and the balance shall be supplied by ABC Incorporation. The price for the entire purchase has been fixed in the agreement, and the conditions for supply are determined by ABC Incorporation. पूछा क्या है क्वेश्चन में? Advise Mr. Hari as to whether ABC Incorporation and XYZ Limited are associated enterprises or not. So let's look at the question again. So हमें determine करना है whether ABC Incorporation and XYZ Limited, they are associated or not. What is the transaction between them? What is the association between them? ABC Incorporation has the power to appoint 6 directors of XYZ Limited, and XYZ Limited has 12 directors or 12 board of directors. So if two enterprises are supposed to be related to each other, what is the power? How much board of directors should they appoint in the other enterprise?
For associate enterprise, more than half.
More than half, exactly. So it should be more than half. They are appointing 6 directors. 6 out of 12. Is 8 more than half?
No, ma'am.
No, this is exactly half. This is 50%. So ABC Incorporation and XYZ Limited, they are not associated to each other. But there is second part of the question which says total purchases of XYZ Limited is estimated to be 500 crores, out of which purchases of INR 48 crores have been locally sourced, and balance shall be supplied by ABC Incorporation. How much is the balance? Well, balance is 500 less 48. What is the amount?
452.
Exactly, 452. So that basically means that out of all purchases, 452 is supplied by ABC Incorporation. Supply कितना होना चाहिए raw materials का associated enterprises के लिए?
90% or more.
Exactly. Exactly. It should be 90% or more. So is 452 90% or more than 90% of 500?
Yes, it's 90.4%.
Exactly. It is 90.4%. And this is the reason ABC Incorporation and XYZ Limited, they're associated enterprises. So what I'm really trying to say is that for answering these kind of questions, you should be thorough with the percentages that are mentioned in the law. 26% or more, 90%. If it was intangibles, 100%. One executive director, more than half of the board of directors, etc. If we practice more questions, it will come in handy. This is where I've just mentioned the answer in a lot of detail, so you can go through this later on. And we go to the next practice question. The next practice question says, examine with reasons whether the two enterprises referred to in the independent situation can be deemed to be associated enterprises under transfer pricing regulations. So let's look at the first one. PQR Incorporation, USA company. It has its place of effective management also in USA. That means this is a pure USA company. Now, this has given a loan of 170 crores to Mahanandi Limited, which is an Indian company. Okay. And this was on 10th April 2024. So PQR, USA company, it has given a loan of 170 crores to Indian company. The total book value assets of Indian company is 300 crores. Market value of asset is 320 crores. And Mahanandi repaid 30 crores before 31st of March 2025. So do you think PQR, which is the USA company, and Mahanandi Limited, which is the Indian company, they are associated to each other or not? First, you tell me the answer and then I will discuss it. Okay. Yes, I have answers already on the group. Can I get more answers? Can I get more answers on the portal also? Okay. Take some time. Do you think they're associated or not? Okay. How much loan is required to be associated?
51% or more of book
Exactly.
value of it.
Exactly. More than 51% is actually required. 51% or more is actually required. Now, in this particular question, we actually have to look at either 300 or 320. Well, we have to actually look at 300 only because the law says book value of asset. It does not say market value of asset. So if the question says market value of asset, ignore it altogether. Don't even think about it because we have to look at the total book value of the asset. Book value of the asset is 300 crores. But they have actually repaid 30 crores before 31st March 2025. Well, the thing is, whatever they have repaid has to be taken into consideration. You should not take that into consideration. Why? Because the law says at any time. So at any time during the year, it was 300 crores. So is 170 crore more than 300 crores? More than 51%?
Yes, ma'am.
Yes, it is. And this is the reason that these are going to be associated enterprises. I have written the answer here. If you divide 170 by 300 into 100, it's going to be 56.67%. And we just need more than 51% or 51% or more than 51%. So obviously, because this is 56%, it's going to be related to each other. Any questions here? Any doubts?
No, ma'am.
Thank you. Now, this one is very easy, the second one. And it talks about a French company. It has its place of effective management also in France, and it has the power to appoint 3 of the directors of Godavari Limited, which is Indian company, and the total number of directors is 8. So how many directors do you have to appoint?
More than 50%.
Exactly. Yes, exactly. So if it was 4, do you think? So these are not associated to each other because they've not appointed more than 50%. What do you think if this was 4. Now do you think they're associated?
No, ma'am.
No, they're still not associated because you need at least more than 50%. So if they were 5, if this was 5, then they would have been associated to each other. But at 3 and 4, they're not associated to each other. And finally, let's look at the last one, which is total value of raw materials and consumables of Saraswati Limited. This is an Indian company, is 900 crores. Of this, supplies to the tune of 830 crores are made by Zoel Limited, which is a German company, having place of effective management also in Germany, and the price and terms are decided by the German company. So when it comes to raw materials, how much do you have to supply?
90% or more.
Yes, that's absolutely correct. And in this question, it is 92.22%. How? 830 divided by 900 into 100 will give you 92.22, because this is more than 90%. The two companies are deemed to be associated enterprises. So yes, these are the kind of, questions you should practice more on associated enterprises. And then these are the kind of questions that you would see for deemed associated enterprises. Not see you again. I'm starting with a new slide deck right here. Just allow me a minute and I will share the new slide deck which talks about transfer pricing method. But any questions on this particular slide deck, this entire thing? We've covered all these topics now.
No, ma'am.
Okay, great. Let's take a break. We will come back at 7:40 and we will start discussing the new slide deck, which is on transfer pricing method. So I will see you guys at 7:40 exact.
Sure, ma'am.
Thank you. हाँ जी. Back, and we will resume the live virtual classes on transfer pricing. Do you see the new slide deck? This is the new slide deck. Is this visible?
Yes, ma'am.
Okay, thank you. This particular slide deck, which is the next topic in transfer pricing for us, this is a very, very important topic, and this is on transfer pricing methods. Now, as far as India is concerned, these are the 6 methods that we will be discussing. The first one is comparable uncontrolled price method, which we also call as CUP. The second one is the resale price method, RPM. The third is cost plus method, CPM. Then is transactional net margin method, TNMM. Fifth one is profit split method, which is PSM. And finally, there is something called as other method. Now, right now, you might be overwhelmed. You might be thinking it's too much. I mean, how many methods? It's so confusing. CUP, RPM, CPM, TNMM, it's so confusing right now. But I can tell you that as we progress, this will become very, very easy for you guys. And you will be able to distinguish between what are, the methods, what is CPM, CUP, RPM, etc. So just give me some time. I will explain each method and then it's going to become very easy. After this, I will be talking about the selection of the most appropriate method. Now, if you get a situation that, this is the related party transaction and this is the price at which they have transacted, you are required to calculate the arm's length price. Okay, that, what is the price that at which they should have transacted and what is the price that they have transacted. Is there a difference between these two? That is what you have to calculate, that what is the arm's length price. Now, for this calculation, there are these 6 methods available. But the question is, which method do you apply where? I mean, if you get a situation, do you apply CUP? Do you apply RPM? Do you apply CPM? Which method do you apply when? Well, that is called as the most appropriate method. OECD has given you circumstances right there that, if this is the circumstance, if this is the manufacturer, you apply CPM. If you're talking about a distributor, you apply resale price method, etc. So we'll talk about this concept, which is selection of the most appropriate method. And then we will discuss something called as benchmarking analysis. Benchmarking analysis is a very, very interesting topic. It's very fun and it's all practical oriented. So I'm going to give you a lot of practical examples on how we conduct the entire transfer pricing, and that will also cover the examination point of view. So that's really the plan for this particular slide deck. Let's go back and we will start with transfer pricing methods out there. Now, the question is, what was the arm's length price? This is just a slide in reiteration. ये slide दोबारा वही चीज बोलती है कि section 92F says that there is something called as arm's length price. Arm's length price basically means that, look for an independent party. What is the price at which they are transacting? That should be the arm's length price, but in comparable circumstances. What is the meaning of comparable circumstances? Well, those 5 comparability factors that we were discussing: characteristics of property, services, business strategies, economic circumstances, FAR analysis, etc. So, अगर वो सारा कुछ match हो जाएगा, then whatever is the price at which independent parties are transacting, that will be called as the arm's length price. The point is that, this is really the slide. Remember this slide? We've done this before. So the point is that this 80 rupees at which related parties they transacted, this is called as transfer price. But we know that this is not the arm's length price because this was a wrong price. They used this price because they were trying to lower their tax liability. They were trying to mitigate their tax liability. But the question is, what is the arm's length price then? Is it 120 because independent parties are transacting at? But do you not feel independent parties तो 125 पे भी transact कर रहे होंगे? Independent parties might be transacting at 125. Independent parties might have been transacting at 110, etc. But so independent parties could have been transacting at any price out there. What is the arm's length price? Well, for that, we have these 6 methods available out there, and we will try to find out that what method do we use so as to calculate the arm's length price. Now, the question is, how do you determine the arm's length price? Well, if you look at, the methods that are there in India, there are about 6 methods available. And you cannot say that, this method is perfect for me, because the TPO might feel that there is some other method that is actually perfect for your transaction. So there's a lot of, estimation that is actually required to understand what method suits when. And this is where we will be discussing all these methods, which method is actually best suited to the facts and circumstances. So if you actually look at, the transfer pricing methods, there are 6 methods, as I mentioned, out there. But, in the OECD transfer pricing guidelines, there are only 5 methods that are available. This 6th method, which is there in India, which is called as the other method, this is not there in the OECD transfer pricing guidelines. But this is a method that we have in Indian transfer pricing law. What is the section in India that talks about transfer pricing methods? What is the section in India which talks about transfer pricing methods? Where are the methods written?
92C.
Yes, that's absolutely correct. So all the methods are actually provided in section 92C of the Income Tax Act. So if you actually look at section 92C, it will talk about all these 6 methods, but the OECD transfer pricing guidelines will talk about 5 methods, which are just these 5 methods. It does not talk about the other method. We'll talk about other method also, in detail going forward, but these are really the methods. So why is it that some methods, there are these 3 methods like the CUP, RPM, and CPM? So comparable uncontrolled price method, resale price method, and cost plus method. These are called as traditional transaction methods. Okay. And then there are these transactional net margin method, profit split method. They are called as transactional profit methods. Can you make out why? Why are these called traditional methods and these are called transactional profit methods? It's coming from the name itself.
In these 3 methods, we are concentrating more on the sale price. And in this, we are talking about the final profit figure.
Yes, that's absolutely correct. If you look at these 3 methods, do you think we're talking about only the price? We're talking about price here. We're talking about, again, resale price here. We are again talking about the cost, which is more like, like a price here. This is the reason these are called as traditional transaction methods. It's actually said that these 3 methods are very, very simple. Everything that I'm mentioning about, I've written them on the slides here. These 3 methods, they're also called as direct methods because they're easy and they're not very complex. So these 3 methods are also called as direct methods because they're all very easy. They're just talking about the price out here. But these are a little complex because these methods are talking about profitability right here. So this one talks about TNMM, it talks about margin, net margin actually. So which is like a net profit kind of a method. Then this one also talks about profit split. So it is splitting the profit. And sorry, this is the reason that these 2 methods are more focused on the profitability of the company. This is the reason these are called as transactional profit methods. And these methods are actually used when you have like a complex transaction or unique intangibles, etc. Then that these are the methods that you have to use. And finally, there is something called as other method. I will talk about when the other method is actually required. But these are price methods and traditional transaction methods. And then we have transactional profit methods. So, what was the scene before? So, whenever there was like a situation that we have that, which method now we apply, there was always, like a hierarchy that we used to have. So everyone said that, whenever you get like a transfer pricing situation, that which method to apply, what you do is apply the first one first. So apply CUP first, If COP is not available, because COP requires like a few things and it requires data. If you don't have that available, then apply RPM. If you're not able to apply RPM, I'll tell you about reasons later. But if you're not able to apply RPM, then apply CPM. If you're not able to apply CPM, then use TNMM. If you're not able to use TNM, then apply PSM. So there was a hierarchy of methods out there. Hierarchy in the sense that उन्होंने बोला पहले COP लगाओ, COP नहीं लगे तो RPM लगाओ, RPM नो देन CPM, CPM नहीं लगता तो TNMM, TNMM नहीं लगता तो PSM. तो ये एक hierarchy थी. But now amendment has been made in law, and law says that there is no hierarchy now. Now we have a concept, and this is provided under Rule 10C1 of the income tax rules, and it says that we have the concept of most appropriate method. It says अपना situation देखो, look at your situation, look at your client situation, and look at the facts and circumstances of that particular situation. Whatever is the method that will give you like the correct results, the most accurate results, use that particular method. So the hierarchy has been done away with. उन्होंने hierarchy delete कर दी है. Hierarchy is not there anymore. And what they have actually introduced is this concept which is called as most appropriate method out there. Whatever is the method जो आपके situation से most appropriate है, whatever is the method that is the most appropriate to your situation, use that particular method as the arm's length method or the transfer pricing method.
The most appropriate is different from the word most favorable.
Yes, very. We don't use more favorable in transfer pricing. We use most appropriate. Whatever is most appropriate, not favorable. Favorable is a word which can be, are you talking about favorable to taxpayer? Yeah, favorable to tax authorities. Favorable to what? So we don't use most favorable. We use most appropriate method. This concept is also called as MAM, which is, sorry, just give me a minute. This concept is also called as MAM, most appropriate method. And to discuss most appropriate method, this particular concept, I will discuss it after I have discussed all the methods, because after you discuss all the methods, you will understand that what is most appropriate for a given circumstance. So this is the reason I will start with the first method out here, which is, let's start with the comparable uncontrolled price method. But have you guys gotten the concept that we don't have the hierarchy anymore? And this is also like a, this could be a question. I've seen this question in the past. Is there a hierarchy to transfer pricing method? No, there is no hierarchy. Now we have the concept of most appropriate method. Okay. So let's look at the first method, which is comparable uncontrolled price method. If I don't explain, all the definition of this particular method is coming from this terminology itself. इस मेथड का नाम ही बता देता है कि ये मेथड क्या करता है. So let's see. Tell me, what is a controlled transaction? What is a controlled transaction? Remember, we discussed
transaction between an enterprise and its associated enterprises.
No. Yes, a controlled transaction. But sorry, what I meant was, what is an uncontrolled transaction? Because this method says uncontrolled price. So what do you think is an uncontrolled price?
Transaction between unrelated parties.
Yes.
If we were to transact at fair terms in the market, at what price this transaction would happen?
Yes, exactly. Basically, very, very simply put, uncontrolled price basically means what is the price at which independent parties are transacting at, right? Now, this method says uncontrolled price, but it has to be comparable. So what does it mean, comparable?
By applying those factors of comparability.
Exactly, by applying those factors. So this method says that are you able to find an uncontrolled price? Are you able to find an independent party price? I say that yes, I have an independent party price, which is, let's say, this 120 rupees right here. I say that yes, I have independent party price. This is my uncontrolled price. The next question it asks me, is this comparable? I say that yes, because this situation was talking about pens and this was also pens. I say that this is ink pen, this is also ink pen. I say that yes, this was also manufacturer, this is also manufacturer. Then I say that this is also India, USA, this is also India, USA. So I tell them that yes, this is comparable also. So the law tells me that, okay, use that particular price as your arm's length price. So you can use 120 as your arm's length price by using which method? Comparable uncontrolled price method. And that's what really the method really talks about. So it says, are you able to find an uncontrolled price like an independent price? Is it comparable to your situation? Can you compare and everything is comparable? I say yes. So that is basically the comparable uncontrolled price, and that is the CUP method. That's about it. That's the most direct method out there. So if I get a situation, and this particular situation says that, that you want to calculate the arm's length price of a related party transaction, well, I say, do you have an independent party price? Is it comparable? If yes, just copy paste that particular price, and that will become your arm's length price. By using which method? By using the CUP method, the cup method. So yes, this is the most direct method. This is the easiest method out there. Any questions? Okay. Now the question is, what factors are you going to see so as to make sure that this is a CUP method ALP? So this is the same thing, type of the product. I've just, provide this slide again. This मैंने फिर से ये स्लाइड वही वाली लिखा हुआ है जो वो फैक्टर्स थे. सो दे टॉकिंग अबाउट टाइप ऑफ द प्रोडक्ट, दे टॉकिंग अबाउट मार्केट लेवल, whether you're a manufacturer, distributor, service provider, geographical market, India, USA. You have to make sure that the period of the transaction is the same. Then you have to make sure that the contractual terms are the same, the economic conditions and circumstances are the same. If all these things are matching, then you can just copy paste this price as your arm's length price. अगर ये सारी चीजें मैच कर जाती हैं, then ये वाला प्राइस बन जाता है arm's length price. इस मेथड से, CUP मेथड से. Any questions here?
No, ma'am.
Okay. Now, the only thing about CUP, do you see that it requires a lot of data? I mean, how is it that I will be, let's say I have, taken up a transaction with my related party. Now, the problem is that how do I find out an independent party out there who has also undertaken the same transaction? And then even if I find it, even if I know that, there is an independent party who's actually undertaken that transaction, what is the chance that I will have that data available? पहली बात, इंडिपेंडेंट पार्टी मिलना मुश्किल है. सेकंड, अगर इंडिपेंडेंट पार्टी मिल भी गई, उनका डेटा कैसे मिला? And that is really the problem with comparable uncontrolled price method. Data availability. That is one problem with comparable uncontrolled price method. Data generally is not available. But if you have data available, then this is the best method that you can use because it does not require, a lot of adjustments. It's very easy method out there. And this is the reason tax authorities, they love this method. It's like their favorite out there because it's a very, very direct method, available. Now, I'm going to ask you a question. Let's say that I have a related party transaction, and I have a transaction wherein my party is transacting at 100 rupees. Now, I find the same transaction between an independent party and they are also transacting at a price. But, and I can take their price as the comparable uncontrolled price method price. So I can use that CUP and copy paste it as my ALP. But then there is only one problem. The problem is that those people are offering quantity discount, whereas I don't have quantity discount. Like everything is same about the transaction. Um, my related party transaction is 100% comparable to the independent transaction. But the only problem is that they are offering quantity discount and I am not offering quantity discount. Do you think I can still take it as CUP? Any perspective? Do you think I can still take it? I can still use that method? Okay. Okay. Answers on the group. Yes. Yes, you can add discounts. Exactly. So you know what? वैसे ही as it is to get CUP method is very difficult. Now that I have found this particular transaction, I can take this independent party price as my CUP price, but I'll have to make like a few adjustments. If I'm able to make that particular adjustment, quantity discount was provided there. If I'm able to provide quantity discount here also, or I can remove quantity discount there, and then my price is also without quantity discount. If I'm able to make that particular adjustment and then compare it, then I can use CUP method. And this is what is mentioned on the slide also here, that you can use CUP method, but you have to make sure, one, there are no differences. But still, if you feel that there is a difference, are you able to initiate an adjustment? Can you make an adjustment so that the difference goes away? Can you make an adjustment so that there is no difference? Can you eliminate that particular difference? I say yes, I can do something to just remove quantity discount from there. Well, then you can use CUP method. So this is what is provided in this particular slide right here. It says that, ideally, it will be the best if you don't have differences. But if you still have differences, if you're able to eliminate those differences, if you're able to remove those differences by using adjustments, then you can use the CUP method out here. Now, the question is, how do you remove adjustments? We'll talk about it. I'm going to give you an example. But is this bit clear? Is this clear? Any questions here? Okay.
मैम डेटा कैसे मिलेंगे?
Data can be available through intercompany agreements. Maybe आपको कुछ पता है अपने कॉम्पिटिटर्स के बारे में और आपको उनकी इंफॉर्मेशन पता है, तो डेटा मिल जाएगा. अदरवाइज डेटा मिलने के लिए हमारे पास एक ट्रांसफर प्राइसिंग सॉफ्टवेयर होते हैं जिसमें 36,000 कंपनीज का डेटा होता है. We have these transfer pricing softwares which has data on, just as giving you an example, 36,000 companies in India only, or 48,000 companies. I'm not sure right now, but more than 40,000 companies are there for sure on that particular database. So you can get information from there. I'm going to talk about these also. So if you actually see this particular slide, this is where I've talked about these are the transfer pricing databases. Then this is how you find companies from that particular database, etc. I'll talk about all this later. But yes, there are databases.
कस्टमर ऑथोरिटी हेल्प नहीं कर सकते मैम?
Sorry,
कस्टमर ऑथोरिटी
sorry, customs.
कस्टमर ऑथोरिटी मैम जो इंपोर्ट एक्सपोर्ट डेटा को हैंडल करते हैं.
सो ये जो डेटाबेसेस हैं, ये डेटा कलेक्ट अपना इधर से ही करते हैं, गवर्नमेंट ऑर्गेनाइजेशन से, आरओसी से. ऑल द डेटा दैट इज एक्चुअली फाइल्ड विद द आरओसी. रिमेंबर देयर इज पब्लिक व्यूइंग अवेलेबल ऑन आरओसी. That
Yes.
is where they actually collect all the data from. But they've created that particular software for transfer pricing purposes. तो ये सॉफ्टवेयर डेटा तो उधर से ही कलेक्ट करते हैं और बहुत सारे डिफरेंट सोर्सेज से कलेक्ट करते हैं, बट ट्रांसफर प्राइसिंग पर्पसेस के लिए होता है. सो आपको एज लॉन्ग एज आपको इन्फॉर्मेशन कहीं से भी मिल रही है, एज लॉन्ग एज वो इन्फॉर्मेशन ऑथेंटिक है, आप वो यूज कर सकते हो. और वो इन्फॉर्मेशन का आपके पास कुछ प्रूफ होना चाहिए. अगर वो चीज है, देन यू कैन यूज दैट पर्टिकुलर इन्फॉर्मेशन. We'll talk a lot about all these things practically. How is it done? How is data available, etc. We'll talk about that. But guys, any questions with respect to CUP? Otherwise, we'll just go on to a question with CUP. Any question? This is CUP method. This is just a slide which says Find out an independent party price. Is it comparable? Yes, it's comparable. Do you have to make an adjustment? Make the adjustment, and that will be the arm's length price. So you can read, this later, the revision. This is just saying what is the COP price. Okay, let's look at this particular example on what is the COP price. Let's say that there is a US limited company. And I can also tell you, right now, this is the question and this is the answer. But otherwise, going forward in a lot of slides, the question is here and the answer is here. So I will tell you the page number. Use that particular page number in your CA manual. Use the question from there and the answer will be provided here. But whatever is convenient to you, आप अपना CA manual अपने साथ रख सकते हैं, CA manual का chapter, और उधर से भी देख सकते हैं. So yes, let's look at this particular question for COP method. Let's say that there is a US limited company. This is a USA company, and this USA company has a subsidiary which is in limited in India. Let's just presume that this is a wholly owned subsidiary if they don't say it. So that means there is a USA company and the USA company has an Indian company. Both are associated enterprises. Now what happens? US Limited sells computer monitors to Ind Limited. And so US company sells computers to India company. US Limited also sell computer monitors to CMI Limited. This is another computer reseller. So US company दो लोगों को computers देती है. US Limited gives computers to Ind Limited, and this is a related party transaction because US Limited and Ind Limited, they are related to each other. And US Limited also sells computers to CMI Limited. This particular transaction is not related, okay? Now it sells 50,000 computer monitors to Ind Limited at 11,000 per unit. The fixed price for CMI Limited is 10,000 per unit. This is where you feel that there is something wrong. There's something wrong out here because when US Limited sells computers to related party, this is at 11,000 per unit. But when they actually sell it to CMI Limited, it's actually 10,000 per unit. Do you think there's something wrong? Yes, there is something wrong because they should sell to related party also at the same price at which they're selling to independent parties. Otherwise, there is a price manipulation. Yes, it's on the chat box. Yes, it's very correct. There is mispricing out there. Let's read, more. The warranty in case of sale of monitors by Ind Limited is handled by IND Limited. However, for sale of monitors by CMI Limited, US Limited is responsible for the warranty of 3 months. Both US Limited and IND Limited offer extended warranty at a standard rate of INR 1,000 per annum. On these facts, how is the assessment of Ind Limited going to be affected? So what they're really trying to say is to calculate the arm's length price. Now the question is, how do I calculate arm's length price? What method should I apply? Now this is very easy. We're doing COP method. So obviously COP method is applicable. No, that is not how you actually decide. Why do you apply COP method? Because we have one related party transaction and then we have another transaction out there, which is an independent party transaction. US Limited is related to Ind Limited. That's absolutely fine. But we also see an independent party situation where US Limited is selling to an unrelated seller, which is CMI Limited. So we can use this transaction as, the arm's length price to US incorporation. So what we can use is independent party price. What is the independent party price here? And can we use that as the arm's length price? What is the independent party price here?
11,000.
Yes. Independent party price.
Sorry, 10,000.
Yes, exactly. It is 10,000. So the independent party price is 10,000 and we can use that as the arm's length price under which method? COP method. But the point is that before we're actually using it, we see that there is an adjustment that is actually required. What adjustment? cost of warranty. This price actually includes the cost of warranty. And what should we actually do? We should remove this cost of warranty from this from this independent party price. Why should we remove it? Well, that is because for the in-company transaction, there is no warranty out there. It is handled by in limited only. So there is no warranty there. So for the related party transaction, there is, warranty is just handled by them. But for the independent party situation, warranty is there. So we should delete that warranty from there, and then these two transactions will be comparable. So what we do is we start with the independent party price, which is the uncontrolled transaction price. What is the price? It is 10,000. Then we delete the warranty from there. So how much warranty should we delete? Well, 3 months warranty for 1,000 rupees. So it should be 1,000 rupees, multiply it by 3 months, 3 by 12, and it is actually 250. So what is the arm's length price? It becomes 10,000 less 250, which is 9750. Now, this is the price, which is an independent party price. And they are really trying to say is that this is the price at which independent parties transact. And you should also, if you are a related party, you should also transact at this particular price. But I realized that, listen, I don't transact at 9750. मैं तो 11,000 पे transact करती हूँ. Obviously, there is a difference. What is the difference? 1250. So this is, the amount of difference, and this is the amount of adjustment that will be required. How many computers? 50,000 computers. So what will be the total amount of adjustment? The total amount of adjustment will be 50,000 into 1250, which is 6 crores 25 lakhs out there. So this will be the required amount of adjustment out there. I'm going to give you another example, tell you the same thing looking at this particular diagram here. This related party situation, they transact at 11,000. Okay. This situation, they transact as at 9750. How 9750? Well, they were transacting at 10,000. Less we deleted the warranty because that was not required, because this is without warranty. So this should be equal comparable. How should we compare it? By deleting warranty. So when we deleted warranty, this came at 9750. Now, I basically am trying to tell them that, 9750 is the uncontrolled price. And that is the price at which related parties should also transact. But what is the price जिसके ऊपर related parties transact कर रही हैं? 11,000. It should be 9750. So what is the adjustment? What will we add, out there? That will be 1250. So that will be the amount of adjustment that will actually be required in this particular case. And that will be the addition that will actually be made. Any questions?
Ma'am, why don't we start with 11,000? Add the 250 of warranty, since the 11,000 does not include the cost of warranty.
We can't start with, the controlled price, because controlled price is as it is mispriced. So we can't start with that. We have to start with the uncontrolled price, because this is the comparable uncontrolled price method. So if you see, it is the uncontrolled price that you're looking at, and you're trying to compare the uncontrolled price. This is the reason you start with uncontrolled price and then you make it comparable. You can't start with, the controlled price. You can't start with a related party price, because that is as it is mispriced. So you start with like the correct price, which is the independent party price, and then you make it comparable. So this is what we've done. We started with the uncontrolled price and then we've made it comparable. So that is the COP method.
This starting with the uncontrolled price stands true for all the methods.
No, not for all the methods. I mean, we'll discuss, but this is there for this. Every time that you get a question relating to COP method, just make sure that you start with the uncontrolled price. The other methods you will understand when we talk about those particular methods, how we start, etc. I will keep explaining what you start with and what you don't start with, but it just comes from the method. It's just, like this method was so predictable, like, you can make out. The other methods are also, similar. So just remember, when it comes to COP method, you have to start with the uncontrolled price, because as it is, you cannot start with the controlled price, because controlled price is as it is mispriced. It's something which is wrong price. You cannot start with the wrong price. And then, even if you start with the controlled price, you don't know the cost of warranty which is there for in limited. Now, for US, for CMI limited, it was 3 months. But for IND limited, you don't know. Why is it that they will only give 3 months? Maybe they give 4 months, maybe they give 5 months. The question does not say anything. This is also the reason that you actually start with uncontrolled price. Why are we deducting 250? Why are we not, adding 250? Because in this particular question, it says that they offer warranty out there. So this prices are always there with warranty. This is the reason we delete it and don't add it, out there. We delete the cost of warranty because it's included in the price which is actually charged. Why is it charged? Because it says that US Limited is responsible for the warranty. This is the reason that we actually delete it. You have to, look at the wordings of a particular question to see whether we delete it or we add it, etc. So you'll have to look at a particular question to see that.
Whether only warranty we cover, if like any other conditions like quantity discount or trade
Yes.
discount.
There are other things also that we could delete: quantity discount. Then there is sometimes there is working capital adjustment, etc. I have, another example that I have quite a few examples. After we discuss all the examples, after we discuss all the methods, I have provided, some examples right here. These practice questions I've, provided here. And these practice questions I've put in after all the methods because I want you to guess and apply which method. So this is the reason. This is one of the methods on COP again. And in this particular situation, it is cost of insurance and freight. And then there is another question there on which I will be talking about quantity discount, etc. There will be a question we will be talking about on credit period, etc. So we'll discuss all that. But right now, I just want to discuss one example per method. After that, after we discuss all the methods, I'm going to take you through, different practice questions, a lot of practice questions. And there, I think it will be easy. It will be more tricky to understand which method. Right now, because we were discussing COP method, you know that this is COP method will be applicable. But later on, when we discuss all the methods, I want you to, apply which method. We'll discuss more examples. But any questions right now? Okay. Shall we go to some other things relating to COP method? Okay. Okay, great. Thank you. Now, when it comes to COP method, there are these two types of COP method. There is something called as external COP, and then there is something called as internal COP. Now, let's look at external COP. External COP basically means, let's take this kind of example. It means that there is one associated enterprise, AE1, and it is selling unbranded Colombian coffee beans to AE2 out here. These two are associated enterprises and they are selling unbranded Colombian coffee beans. And so this is the control transaction. What is the price that they are transacting at? We need to make sure that this is at ALP. I find out while I was trying to make out what is the ALP ढूंढने के लिए मेरे को लगा I also saw another enterprise in the market, like a non-AE1, which is not related to this, and they are also selling unbranded Colombian coffee beans to another random enterprise in the market. So I decide that, let's look at what is the price that they are transacting at, and I'm going to use this price for this particular transaction. So what I have done is I found out independent party transaction. This was the independent party transaction, and I use this particular price. I copy paste it to this particular transaction, and so that will be the ALP. So let's say that this were transacting at 100 rupees and these were transacting at 200 rupees. So I decide that 200 rupees is basically the ELP. Why? Because they are transacting at, this independent party situation, they are transacting at 200 rupees. And COP, for that, if you see, they're very, very specific. It talks about unbranded Colombian coffee beans. And this one is also talking about unbranded Colombian coffee beans. So the product is the same, the country is the same, everything is the same. So I adopt this price as the arm's length price. Any difficult? Is this what we were not discussing? This is what we were discussing all this while? Same thing that we were discussing? यही discuss कर रहे थे हम अभी? Yes, exactly. This is called as external CUP. Why external? Because we have found out two external parties out there and we are using their price as the arm's length price. So this is external CUP. Then there is something called as internal CUP. What is internal CUP? In internal CUP, let's see that there is I company here in India. This I company here in India is actually selling unbranded Colombian coffee beans to F company out here, and they are related to each other. This ICO is actually related to F company out here, 100% subsidiary. So they are selling unbranded Colombian coffee beans. This is my controlled transaction out there. I want to make sure that this controlled transaction, is it at ALP or not? Now I was trying to use CUP method, and while using CUP method, I said that I want to find out other independent parties in the industry who are also selling unbranded Colombian coffee beans. So I don't find independent parties really, but I see that my ICO1, my Indian company, is also selling unbranded Colombian coffee beans to non-associated enterprises also. So it happens a lot of time practically also. Let's say that I have Indian company. My Indian company is selling coffee to related party. My Indian company is selling coffee to unrelated party. My Indian company is selling coffee to more unrelated parties out there. So I decide that why not I use this particular price, the price at which they're selling to unrelated parties. I should use this as the arm's length price, and I should make sure that these people, these related parties, they also transact at this particular price. This is called as internal CUP. Why is it called internal CUP? Because internally within, I have found my comparable uncontrolled price. And this is the reason this is called as internal CUP. So if these were transacting at 100 rupees, so if my Indian company is selling to related party at 100 rupees and it is actually selling to unrelated party at, let's say, 200 rupees, well, then I will make sure that my related party transaction is also at 200 rupees altogether. This is called as internal CUP out there. Any questions? Okay. So which one do you think is better, internal CUP or external CUP?
External. External.
Okay, why do you say
Ma'am,
that?
even though we say it is internal, it is maybe subjected to some kind of manipulation since it is in the same group. And
No, but if you see, these two entities, they're not related.
but then maybe if you're in the same group, the reliability factor is still an issue, maybe.
But they're not in the same group. They're unrelated parties altogether, according to me.
But your Indian company that is in the same group as yours. So
Okay.
there is a
Okay.
chance. And always we say that external evidence is much more reliable than the internal evidence. So maybe
Okay. Yes, you're correct. Any other perspective? Anyone else?
मैम एक्सटर्नली बढ़िया हो
Acha, okay. Oh,
इंडिपेंडेंसी मैम
acha, okay.
इंडिपेंडेंट ट्रांजैक्शन होंगे.
Okay. Anyone else? Okay. So if you read through the OECD transfer pricing guidelines, OECD transfer pricing guidelines say that internal comparable is actually preferred over external comparables. You know why? Because if it is an internal comparable, which is internal CUP, they say that that is actually preferred over external CUP. Why? Because of a lot of reasons. One, data availability is not a problem. Second, you cannot find an external party situation which is exactly to your situation out there. There will be some difference or the other. Credit period is different, or this and that is different. So practically we see that internal CUP is actually better than external CUP. This is actually better. And why is it better? Because data availability is much more smoother. Data availability is much more better as compared to external CUP. And also when you look at the intercompany agreement, you can actually look that this intercompany agreement and this intercompany agreement, except for the price, most of the conditions would actually be the same. So this is more reliable as compared to external CUP out there. This is what the OECD says. Okay, any perspective? You think no, this is wrong, OECD is wrong?
कंपेरेबिलिटी फैक्टर मैम ज्यादा आसान होगा इंटरनल में लगाने में.
वो ज्यादा आसान होगा, वो ज्यादा इजी होगा, वो उसका डेटा रिलायबिलिटी ज्यादा इजी होएगा. एज आई मेंशन बिफोर व्हेन आई स्टार्टेड विद द CUP मेथड, I said that data availability is always a problem. One, finding independent party is a problem as it is. There are so many independent parties out there. How do you find out independent parties? Second, even if you find out independent parties out there, what is the guarantee that they will give you the intercompany agreement? Sabka agreement jo hota hai, that's very confidential. What is the guarantee that they will actually give you data, or you will find data relating to that independent company intercompany agreement? So data availability is like the most difficult thing in CUP method. And then CUP method also looks at, I'm putting it in the chat box. Just give me a minute. This is a terminology that you should know for CUP method. CUP method looks for strict product comparability. CUP method looks for strict product comparability. It's not like as if, some adjustment here and there is absolutely fine. That's okay. But then otherwise it looks for very, very strict product comparability. Whatever the product that you're talking about, remember it wasn't for any other reason. I was saying that pen has to be the same to pen. And then I also said that ink pen has to be same to ink pen. That is what we need for CUP. Very, very strict product comparability. And that is very difficult to find. And this is the reason internal CUP is actually preferred over external CUP. So that is really the CUP method, which is the comparable uncontrolled price method. The next price is resale price method. Sorry, the next method is the resale price method. But any questions relating to CUP? We'll discuss more questions in the next lecture. All methods, we'll discuss more questions.
Ma'am, when we say internal CUP, so basically we'll have to disclose this method that we are using internal CUP in that forms which we. But then when this goes for assessment, or when it goes for TPO, so like will not they challenge this price, or will not they ask for more evidence? What kind of evidence should we keep so as to later on to avoid the scrutiny?
Many things out here. So one thing is, when you actually, there are two things that you have to file, and you might have, you might know about it also. And we'll discuss this more when we discuss documentation. So you have to file that transfer pricing return. Don't call it transfer pricing return ever, okay? It's called Form 3CEB. It's also called as accountant's report. But just to, make it easy for you guys, easy to understand, I'll call it transfer pricing return. In transfer pricing return, you just have to write which method. And that too, you have to write just CUP. That's about it. No other information. And then there is a very, very big document which is called as the TP study. In the TP study, you have to write which method? CUP method. What kind of CUP? Internal CUP. What is the evidence that you're giving? We're giving this intercompany agreement. What are the details of the intercompany agreement? What are the prices? What are the other terms and conditions, etc.? You have to write everything in that TP study. So when you give actually the evidence for internal CUP, you tell them that this is the intercompany agreement. When ICO is your own company, you have all the agreements available, with this one and with this one, etc. So you give them like a screenshot or, like a intercompany agreement out there that we also have an agreement with this independent party. And this is the price at which we are selling to independent parties. So that actually becomes the internal CUP out there.
And when we select the external cup method, and now since it's external and we have taken help of that database software which you had just said, should we write the name of that software in that TP study?
Yeah, you have to write. I will, display one TP study sample to you guys. You don't write just the name of the software. I mean, you write the database, then you write about the database, then you write how many companies were there in the database, then what is the search procedure that you used to actually find out that one company, because as I said that there were 38,000 companies in the database. How did you come to that one company? You have to write that entire exercise. So, if like a TP return is like maybe like 13 pages, 10, 14 pages, etc. A TP study is about 400 pages, 500 pages, etc. That is the level of detail that you put in a TP study. We'll talk about this in detail going forward. But shall I start with the next method now? I think the next lecture will be very, very interesting for you guys, because in the next lecture, I will tell you not just an examination point of view, but in the next lecture, we will also discuss how do you find out comparable companies, from these 38,000 companies, how did you come to, one company, or what if you don't find one company, you find like 10 companies, what do you do, etc. That is what we will be discussing in, the next lecture. So I'll try to make it very interesting, for you guys in the next lecture. But coming back, we have the second method available right here, which is the resale price method. Tell me something, when is resale price used? Who are the people in the industry who use resale price? What do they do?
Traders.
Traders, yes, absolutely correct.
Retailers to final customers.
Exactly, yes. Distributors, wholesale retailers, etc. So you guys have actually guessed it very right. So this particular method, which is the resale price method, it is available for traders and distributors. So whenever in the question you see that there is trading happening, there is distribution happening, this is the method that you have to apply, which is called as the resale price method. Now, if I give you an example, this is one of the questions, and this question talks about trading of electronic goods. Now, because this was trading, because they were, purchasing from related parties and then, they're selling it. I know that this was called as, this will apply the resale price method. Now, going back, what is the resale price method? In resale price method, as we guys discussed, this is used in the cases of traders and distributors. So let's say that there is a parent company. Let's take an interesting example. Let's say that there was L'Oreal USA. Okay. L'Oreal USA sells a particular commodity to L'Oreal India. And what does L'Oreal India do? It does not do anything on the product. No value addition, nothing on the product. What it does is it just sells the L'Oreal products to people in India. That's about it. So this is basically called as resale. L'Oreal India is then called like a reseller, or they're called like a trader, or they're called like a distributor. They're not doing any major value addition to the commodity. They're not, manufacturing the commodity. They're just getting it from outside India and they're selling it to people in India. In these kind of cases, resale price method is quite applicable. So let's say the parent company, it actually sells it to the subsidiary company, and these are related to each other. The parent company is outside India, the subsidiary company is in India. So the parent company sells it to the subsidiary company at 75 rupees. And then the subsidiary company sells it to the end customer at 100 rupees. Why is the subsidiary company making profit? Well, everyone works for a profit. The subsidiary company is like a trader out there. The traders and distributors, they also make profit. Everyone makes a profit. So what it does, it is actually selling to end customers at 100 rupees. What is the activity that traders do? Well, distribution, maybe a little bit on advertisements, etc., something like that. So what they do is not major value addition. So they get the product at for 75, and they sell the product at 100 rupees out there. So what is the profit margin which is being made by the subsidiary company right here? What is the profit margin for the subsidiary company? Well, yes, obviously it is 25 or it is 25% is the margin that the subsidiary company is making, which is the control transaction which you have to establish is at arm's length. What is the control transaction here?
Parent to subsidiary transfer price is 70.
Yes, exactly. So we have to actually justify that this 75 rupees, which is the price between parent company and the subsidiary company, this 75 rupees is at arm's length price. 75 is arm's length. How do I prove that? Well, you can prove it in two ways. What you can do is you can either prove that this 75 is at arm's length, or you can prove that the margin of the subsidiary company, which is 25%, that is actually at arm's length. So you can prove it by any other method. Either this price it at 75 is at arm's length, or this subsidiary company, whatever they are actually selling, the margin that they're making is 25%, that is at arm's length. Why? Because this 100%, this 100 rupees will never change. The subsidiary company, because this is an uncontrolled transaction, this 100 rupees will never change. And this is the reason you can either justify 75 rupees or you can, justify the 25%. And that's because this will never change. This thing will always remain 100. So you can either justify 75 or you can justify the 25%. It's absolutely fine. Now the question is, how do you justify it? Well, what I'll do is I'll open the transfer pricing database and I will look for independent parties in the industry. If they're also earning 75 rupees, well, I will say that that's absolutely, fine. This is at arm's length. If when I open the database, if the independent companies, they are also earning 25 rupees of profit, then I will say that, my situation is at arm's length. Now, what if the independent parties, they are earning a margin of 30 rupees and I am earning a margin of 25 rupees? Do you think I'm at arm's length? Yes, if I am earning a margin of 25 and the uncontrolled companies or, like independent companies, they are earning a margin of 30. Do you think I'm at arm's length?
No.
No, you're not. Because, the problem is that those people are earning way more. So they are giving tax on 30 rupees. They are giving much higher tax. And why am I giving tax on 25 rupees? That means there might be some problem that I've mispriced my transaction. So this is the reason my transaction is not at arm's length. But if I open the database and I find that independent parties, they are earning a profit of 20 rupees and I am earning a profit of 25 rupees, then I'm at arm's length. Because what am I doing? Everyone is paying a tax on 20 rupees, but I am paying a tax on 25 rupees. That means that I am at arm's length price. So to justify resale price method, either you can justify 75 rupees, or what we do is the easier method is to look at the gross margin out here. This is the gross profit margin. The gross profit margin should either be equal to, so it should be 25, or the gross profit margin should be more than comparable companies. Comparable companies should be 20, I should be 25. So I'm paying more taxes. So either I'm Either I should be equal to comparable companies or I should be more than comparable companies. If I'm able to justify that, that means that this 75 rupees is at arm's length price. Any questions? Should I explain it again?
मैम रीसेल प्राइस मतलब कंपेरेबल होगा या कंपेरेबल से ज्यादा होगा तभी वो आर्म्स लेंथ माना जाएगा?
सॉरी फिर से।
आर्म्स लेंथ प्राइस के लिए रीसेल प्राइस हमारा कंपेरेबल होगा या कंपेरेबल से ज्यादा होगा तभी वो आर्म्स लेंथ माना जाएगा?
हाँ, मार्जिन जो होएगा वो तो हमारा ज्यादा होना चाहिए, बट जो प्राइस होएगा वो आई थिंक कम होना चाहिए, बिकॉज फिर मार्जिन बढ़ेगा ना।
जी
या सो मार्जिन या तो फिर हमारा उतना होना चाहिए या फिर हमारा मार्जिन कंपैरेबल से ज्यादा होना चाहिए। अगर हमारा मार्जिन ज्यादा है मतलब हम ज्यादा टैक्स पे कर रहे हैं। अगर मेरा प्रॉफिट 25 है, दैट मीन्स मैं 25 के ऊपर टैक्स पे कर रही हूँ। उनका प्रॉफिट अगर 20 है तो मतलब वो 20 के ऊपर टैक्स पे कर रहे हैं। तो मैंने याद है मैंने बताया था कि द रीजन दैट वी आर इंट्रोड्यूसिंग ट्रांसफर प्राइसिंग इज टू प्रोटेक्ट द टैक्स बेस। अगर आपका एएलपी आप लगाते हो और उसकी वजह से आपका प्रॉफिट गिर जाता है, तब एएलपी नहीं लगाना, तब ट्रांसफर प्राइसिंग अप्लाई नहीं करेगा। ये वही वाला कॉन्सेप्ट है। सो इफ बाय अप्लाइंग द एएलपी, sorry, my margin should either be equal to independent companies or it should be more than independent companies. अगर मेरा मार्जिन कम है तो मतलब मैं कम टैक्स पे कर रही हूँ, मैं कहीं ना कहीं मिस प्राइस कर रही हूँ। Okay. So this is, one of the examples on the resale price method that we'll discuss. Just give me a minute. Let me tell you what page number this is on. Do you guys have the manual available? Can you tell me which page number this is on? Otherwise, I'll just let you know. And you can use that particular question there.
Twenty-four point 24.20.
24.20.
Old model.
24.21. Yeah.
Okay, great. Thank you so much for this. So what you can do is, instead, sorry, just give me a minute. Is the screen visible?
Yes, ma'am.
Okay, thank you. So yes, 24.20, 24.21, that is where this example is actually provided. When I move to the answer, you can just look at this particular question in your book, so it'll become, easier. So this particular example talks about resale price method. In this, we have Earth Private Limited. It is a Calcutta company and it is engaged in trading of electronic goods. Now, if they are asking me about ALP, I know they're talking about trading. Maybe there is resale price method which is applicable because this is a trader company. On trading, we have resale price method available. Now it purchases goods from its AE, which is Sun Pte Limited Singapore, and also from an unrelated party, which is Oceana Limited UK. So it is doing trading, which is fine. RPM will be applicable. But do you see it also signals CUP method? Maybe. I'm not saying. Because, so this Earth company, which is a trading of electronic goods, it is actually purchasing goods and then it sells to other people. When it actually purchases, it is purchasing from AE and it is also purchasing from unrelated parties out there. Now, when they look at the gross profit margin for this particular year, the gross profit margin was 15% for related party, where it was 20% for unrelated party. There is some problem because for your related party, which was Sun PTE, gross margin is 15%. But for your unrelated party, gross margin is 20%. Is there some problem or do you think this is fine? I think this is wrong. Yes, I think less profit, less tax. So, for related party, you're doing less profit, huh? For independent party, you're doing more profit. That should not be allowed. So there is some problem. Well, the after sales warranty of 6 months was provided by Sun PTE Limited, whereas Oceana Limited gave after sales warranty of 1 year. So there is, like a problem with this also. That the warranty is actually very, very different. Warranty is taken 2% of the sales price. Then Sun PTE Limited's brand value is internationally known, and the benefit of the brand can be taken as 1% of the sale price. So some person's brand value is known. Some people do not have brand value here. Now, during the financial year, it sold goods of Sun PTE Limited for 20 crores and of Oceana Limited for 15 crores. As regard transport cost of goods purchased, there was no difference between related and unrelated party. Compute the ALP of the transaction between Earth and Sun by applying resale price method considering the facts of the case. So we know that we need to establish the arm's length price. Which method? The question itself says resale price method. Now, what's happening in this question is that we have Earth Limited. Earth Limited is a trader. It's purchasing from related party, which is Sun PTE Limited at 15%. And then it is selling of Sun PTE Limited at 20 crore. So going back to here, this is Earth Company. It is purchasing from this particular related company and the gross margin here is 15%. Then it sells to end customer at 20 crores. Whereas other unrelated party, if this was an unrelated, if this is Earth, if this was an unrelated party, they were purchasing at 20% is the gross margin. And then they are selling to end customers also at 15 crores. So what do we do in this question? We start with the resale price of goods which is purchased from Sun PTE Limited. The resale price is 20 crores out there. Now, in this situation, why are we starting with 20 crores here? Because what we'll do is we'll use 20 crores here. 20 crore is this 100 rupees. So we'll use 20 crore. Less we'll deduct the margin and then we'll come to this particular price right here. Let me explain you and then you'll understand why are we starting with 20 crores of Sun PTE Limited. So we're starting with, the end price, which is basically called as the resale price. Then from that, we will deduct the profit margin out there, which is this particular profit margin. And obviously, then we will come to this particular price. So this is what we're really trying to do. This is the arm's length price. And this is what you need to establish. How do you come to this 75 rupees? Well, 100 minus gross profit percentage. So you will come to 75. So let's start with what is the amount at which they're selling to independent customers? Well, 20 crore. Now, the profit margin that these related parties have, what is the profit margin between the related parties? What is the profit margin for the related parties? Yes, that's correct. The profit margin between related parties is 15%. Do you think it's correct? Do you think this is at arm's length?
No, ma'am.
No. What is arm's length profit margin?
20%.
20%. So how much should be deducted? Well, we should deduct not 15%, but we should deduct 20%. Why are we deducting 20%? Because 20% is the arm's length margin. You are earning 15%, which is fine. But if you were to compute arm's length price, then let's look at what other people are deducting. You should also deduct that particular price. So what we do is we deduct 20% of that particular price. How did we find 20%? Because this is the unrelated price out there. So we deduct 20% of 20 crores, which gives us 4 crore. So the arm's length price is actually 16 crore. So this transfer price is actually 16 crore. But still we can't use 16 crore because there are a lot of adjustments which are available out there. What is the adjustment? The first one is the benefit of the brand value. Now, if you see here, we are adding brand value. But in the other question, did we not deduct brand value? Yes, I mean we deducted the warranty, etc. So in this one, we make an adjustment for brand value. Well, what we do is we add the brand value out here, and that is because Sun PTE's brand value is internationally known, and that's why. So what we do is we add 1% of the sale price, which is 20 lakh rupees, and then we deduct cost of warranty. Why are we deducting cost of warranty? Because if you see the warranty right here for this one, which is the related company, it is 6 months, and the cost of warranty for unrelated party is actually 1 year. So what is the difference? The difference is 6 months, and we need to deduct that difference of 6 months. The cost of warranty is 2% of sale price. So 2% of 20 crore, and the difference is for 6 months. So we actually deduct that, and that is deduction of 20 lakh. So the arm's length price should be 16 crores out there, and it should not be this. So it should be this arm's length price should actually be 16 crores out there. That's the correct arm's length price. But the kind of arm's length price that we were doing was 15% of gross profit margin. It should have been 20% of gross profit margin. Now, two things that I want to talk to you about here. One thing is that, in this particular situation, they had already given us the margin. I told you could do two things. Either you could compare the price, which is this 75 rupees, or you could compare the profit margin. Now, in this question, they had already given us the profit margin, which was this 15% and this 20%. So this profit margin difference signaled that there is something wrong. Okay, that they're not transacting at arm's length price, but they're asking us to find out the arm's length price, which is they were asking us to find out this 75 rupees. How do we do that? Well, we looked at this particular price, the resale price, which was available to us, because in the last one they had given that this is the resale price to end customers. So they had given us that particular price. So this is what you start with, and then you deduct the profit margin from that, and then you compare this particular price. This is where you actually compute this particular price. So to come to this particular price, what we did was we deducted 20 crores, and we deducted the arm's length margin, which was basically 20% out there. So that is what you actually do. And then if the question asks you all these adjustments, you make those particular adjustments, and that's how you come to the transfer price right here. So what I'm really trying to say is that you have to look at each individual question to how you actually start. In this particular question, you cannot, they had given you this 15 crores to confuse you guys, but you cannot start with 15 crores. Why not? Because you need to find out this particular subsidiary company, this related party, what is the price at which they actually sell to end customer. This is what you need to actually look at. So you cannot use an independent party situation. You have to look at the subsidiary company, the related party situation, and start with that particular resale price. So just to summarize, for comparable uncontrolled price, because the question says uncontrolled price, you need to start with the uncontrolled price and then make it comparable. But in this method, it starts with the resale price. Resale price, what is the resale price? Well, the price at which in related parties, they resell to end customer. That is what you start with, and then you make backward adjustments, and then you arrive at this arm's length price. So that is the difference between these methods out there. Any questions?
Starting point.
Sorry, starting point.
मतलब रिसेल में कैसे स्टार्ट करेंगे और
सो सीयूपी में तो इजी है, जैसे मैंने बोला सीयूपी में अनकंट्रोल्ड प्राइस से स्टार्ट करेंगे, तो आप देखोगे इंडिपेंडेंट पार्टी प्राइस क्या है और उसको आप कंपेरेबल बनाने की कोशिश करोगे. इसलिए हमने इस क्वेश्चन में सीएमआई का करा था, अगर आपको याद हो, इंडिपेंडेंट पार्टी प्राइस, और उसको हमने कंपेरेबल बनाया था. बट रीसेल प्राइस मेथड जो है उसमें हम करते हैं रीसेल प्राइस बोला है, रीसेल प्राइस इज दिस पर्टिकुलर प्राइस हियर। तो इसमें रीसेल प्राइस मेथड में हम स्टार्ट करेंगे रिलेटेड पार्टी से, बिकॉज सब्सिडरी कंपनी ने बेचा ना एंड कस्टमर को, तो रीसेल प्राइस इधर हुआ। दिस इज द रीजन हमने इसमें 20 करोड़ से स्टार्ट करा, बिकॉज वो सन पीटीई लिमिटेड के साथ था और सन पीटीई लिमिटेड हमारी रिलेटेड पार्टी है। तो ये हो गया रीसेल प्राइस, 20 करोड़ हुआ ये प्राइस। और उन्होंने अनरिलेटेड पार्टी के साथ भी प्राइस दिया हुआ है विच इज 15 करोड़, विच इज नॉट दिस पर्टिकुलर प्राइस। तो आप रीसेल प्राइस के साथ स्टार्ट करोगे, इसलिए वो 20 करोड़ के साथ स्टार्ट करोगे, और फिर उसमें से जो मार्जिन है वो डिडक्ट करोगे, क्योंकि आपको पीछे जाना है। तो इस प्राइस से 20 करोड़ से आप मार्जिन डिडक्ट करोगे और आप इधर आओगे, विच इज दिस पर्टिकुलर प्राइस। और ये प्राइस है जिसका एएलपी ढूंढना है, बिकॉज ये कंट्रोल्ड ट्रांजैक्शन है। तो आप बैकवर्ड कैलकुलेशन करोगे इसमें।
Okay.
हम और क्वेश्चंस करेंगे, सो टू मेक इट क्लियर to you guys, but I wanted to start with the cost plus method also, but since we're left with just 5 minutes, I will discuss cost plus method in the next lecture. So today we did, I think, international transactions, deemed international transactions. We discussed what is the relevance of methods, transfer pricing method. We discussed comparable and controlled price method, and we've discussed resale price method. Any questions?
So, good evening, students. Hello, Kriti.
Hello, ma'am. How are you?
Yeah, fine, fine. So, hope you are finding these classes beneficial to you.
Yes, ma'am.
Yeah. Anything which you would like to discuss or give your feedback or suggestion, please kindly fill the feedback form. Everyone, today a few new students have joined: Sangeeta, Urvi, Rivan. So, where you were earlier, Sangeeta, Urvi, Rivan? I saw you today only in this Zoom meeting.
Yes, ma'am. Actually, I had an office, so I could not attend.
Okay. You find it difficult at joining after coming from the office, right?
Yes.
Yeah. Anything which you would like to add on, want to give some suggestions for making these classes more, useful?
As of now, all good.
Nothing. Okay, that's great. So, Kriti, you have done. So this is one of the most important topic, in the international taxation, the transfer pricing. This is in itself a practical different area for practice for the practitioners. Independently, matlab people are practicing in this field. Transfer pricing is such a vast and very, very, important, crucial topic in international taxation, and it's totally different from what we have studied till, the non-resident taxation, then all those things, totally different. The methods, ALP, and everything, documentation. So it's quite interesting. Also, of course, it's quite interesting also. And you please take it so seriously, because this topic in international taxation carries a around 6 to 8 marks. Definitely, इसमें से आते ही आता है. So it has a huge weightage for your international taxation, as you must be aware that for the DT paper, the whole curriculum is divided into 3 sections. That is, first is in substantive provisions, then your procedural law, and then international taxation. So for international taxation specifically, if you talk about, then 30 to 35% is weightage assigned for international taxation portion. तो इसमें जो आपके इनिशियल टॉपिक्स है, नॉन रेजिडेंट टैक्सेशन, your transfer pricing, or double taxation relief, then advance ruling, they मतलब carry huge weightage. फिर उसके बाद में जो रिमेनिंग आपके 4 टॉपिक्स हैं, दैट इज योर बेप्स, your interpretation of tax treaties, then your mall tax convention overview, and the latest developments. इसमें generally knowledge based questions are from those 4 topics, but इसमें सारे practical जो भी application oriented questions आते हैं specifically from these topics. NR taxation हुआ आपका, और TP हुआ, and your double taxation. तो बहुत अच्छे से करके जाइए. Specifically आज मैंने देखा you have done with your how to determine the associated enterprises, international transactions, and deemed international transactions. They are crucial ones before moving, coming into the transfer pricing. To these are the fundamentals of entering into an international transaction, knowing whether these transaction are international transaction or not, before moving to determine the ALP and all. First of all, that transaction must be an international transaction. That's what is the crux of today's class actually. So deemed AE के जो भी clauses हैं, remember this, you have to memorize it. Make ensure ki whatever the learnings, whatever the, for example, 50% of the directors in the other company and all, the 26% of the voting power or not. So exactly the threshold limits is something is given. So that you please try to remember it, memorize it before the day of your exams. Try to again revise those things, because we tend to skip those tricky points somewhere. So it is important one. Right, then we will be moving into next classes, जिसमें जो 94B आएगा आपका, then your 92 CE, secondary adjustment, primary adjustment. Those are again very important topics. So focus on those areas specifically transfer pricing में. और आपका जो आज कृति मैम ने आपके लिए some questions she has given you have done. But other than this, Kriti, we can also give them the assignments that they can do it after their classes. So that doing more and more practice of these questions will give you a hold over these concepts more better, right? So practice whatever the questions are given in your study material. In your MTP booklet, we have also come out with our MTP booklet, which will be containing the transfer pricing questions also. Take out those questions and practice those questions for having a better understanding of these concepts. So this is what about the today's thing, I think. And we can conclude this session now. And in case anything you would want to discuss, it's really welcoming you. Anything, or we can just conclude it. Kriti, you just give them the assignments so they can we can upload the assignments for practicing purpose for you.
I'll do that. Any feedback also, I'd be more than appreciative to receive feedback also, especially if you feel if it's going way too fast or way too slow, so I can adjust accordingly. I think, don't take it otherwise, but I'd be happy to actually receive feedback. So don't be hesitant. If you have anything, just let me know.
Yeah, definitely. Those, because people actually, as Sangeeta said, she is finding difficult to do the classes. So basically, students prefer to view the recorded sessions basically.
Okay.
But take out some time for these classes also, because you have a one-to-one interaction you are providing, and we are having such expert faculties here. So they have the practical experience that they are into these fields, so they can guide you much better than the theoretical people who are doing. So वो जो आपका टच आएगा ना, practical touch, वो इन्हीं faculties से मिलेगा. So come and join these classes. Take out some time. ठीक है, आप recorded भी देख रहे हो, at least jot down your doubts at one place and take that time. Come here and you can definitely ask your doubts lively, live way में. So this is what my suggestion to you. Or whatever the she is also giving you these PPTs and everything. But definitely, as always, I keep on saying कि make your own notes on yourself. वो बनाना बहुत it's very necessary. You should make your own notes for the revision purpose also, to have a good hold over the concepts. It's really very much required that you make your own notes, right? जैसे आपने AE की definitions याद करनी है, deemed AE की conditions है, what are the conditions? तो आप अपना खुद से charts draw करोगे तो वहीं पे आपको याद हो जाएगा. ठीक है? So this is one of the suggestion to you, all of you. And Kriti, then I think we can conclude this session.
Yes, absolutely.
Yeah,
I think I was also telling them, if they, I think, attend the live lecture, just what you mentioned, if they attend the live lecture, I think I'll just keep saying the same thing again and again. I'll just make them memorize, all the provisions.
Yeah.
10%, 50%, 51%. So I think it's better if you guys attend the live lectures. It'll be beneficial for you.
Sure, ma'am.
Yeah, that's what. Yeah. Thank you.
Thank you so much. Thanks, everyone.
Thank you. Good night. Good night, everyone.
Thanks, ma'am. Thank you.
Yeah.